that have been investing in AI for a very long time.
Yep.
So this is new in the sense that, you know, NVIDIA got that famous pop and the world woke up to it, and ChatGPT put it in everybody's language. But these are the businesses that have been investing for a long time, so there's a lot to play for there. But the European Open then, just seconds away. The futures picture for Europe has actually looked pretty positive. US futures, though, crucially, have been dipping, and that could dictate where we head a little bit later today. So the European trade starts right now, waiting for these European equity markets to open up. The FTSE 100 up by 0.1%, always the first out of the gates. We'll keep an eye on some of these earnings stories, but also conscious of the limbo that we are in, as you put it, Guy.
Absolutely. We'll see how some of these stocks open as well. I want to see what Diageo is doing. It's worth mentioning as well that Spanish preliminary January harmonized CPI, 3.5%. That's above estimates. So that's a punchy number. So that kind of leans against the big bond rally we saw yesterday in Europe, which was driven, I think, by the French central bank. So that data's just come out. So keep an eye on what's happening with the bond market with that as well.
Just watching that right now. When we had seen those yields dropping, they were dropping in sympathy with treasuries. All of that partly linked a bit to that Francois de Villeroy commentary that you're referencing around the ECB over the weekend. Walking some of that back now, it would seem. And those yields, yes, they're still weaker, but not by as much as they were on the back of that Spanish CPI number. So 3.5% versus an estimate of just 3%.
But can we put this into some context here for a second? Spain has had a really bumpy ride with inflation. Where
and they were never the driver of our real concern around inflation.
And even though all their European counterparts had this very clear decline in inflation, deceleration, Spain kept kind of popping back up. And it was a concern of whether they were the canary in the coal mine. And now I'm curious if that conversation
But if we're looking at resilience in these economies as well, look at that Q4 GDP number, rising 0.6% quarter on quarter against an estimate of 0.2%. Now, again, this wasn't the source of the concern around inflation, and Spanish growth wasn't the source of the concern either. So maybe the ECB story is a little detached from the Spanish experience.
Maybe, but it just feeds into this overall narrative that this is an economy that is doing not that badly. I guess doing badly is stagnating, but it's not at the moment rolling off a cliff, i.e. it doesn't need significant rate cuts at this moment to support it. I want to support as well. I just want to point out as well, and just point out the Diageo story. Diageo is opening down by 3.18%. Now, it popped on the LVMH numbers the other day, but recently it's been hitting 52-week lows. So another tough report for the new CEO. We're going to talk to her a little bit later on. That stock leading the percentage drop here in Europe. Big, tough day for them to deal with.
So we're watching for some of these European corporates, focused on the earnings story coming later from the tech sector. That seemed to be one of the things we needed to focus in on this week, along with the Fed. We spoke earlier to Christine Nolting, Deutsche Bank's global CIO for private banking, and we asked what the market is in danger of underpricing here. What is the risk that is being underestimated? Let's take a listen to what he told us.
Where there could be disappointments or corrections in the market, or what is the market maybe underestimating, is a little bit the geopolitical risk in the Middle East, I would say. I think you mentioned before, the US probably is retaliating. That could cause some volatility. And if I look in the markets so far, very honestly, from a market perspective, maybe the markets are a bit too complacent, if I may say, on this. So I think these geopolitical topics, and for example, also elections this year, there are so many, that could be where markets create more volatility.
Let's get the view of Marilyn Watson, head of global fundamental fixed income strategy at BlackRock. A great voice to have on the program this morning. Marilyn, really nice to speak to you. We're going to come to all kinds of dynamics around the bond markets, treasury issuance. That's certainly one of the big stories of the last 24 hours. But just there, we were hearing from Christian Nolting talking about the market being too complacent around geopolitical risk. It's easy to come to that conclusion, I suppose, when you look at the lack of movement we had in markets on the back of an uptick in an escalation, if you like, in certain areas of violence over the weekend. What's your view, Marilyn, on the risk that's being underpriced at this point?
So we have definitely seen an increase in geopolitical risk, and the BlackRock Investment Institute has also produced a paper and it does a lot of research into this, and we've definitely increased the level in terms of geopolitical risk that we see there as well. The difficulty is it's very difficult to price at the moment. So all the issues that we're seeing in the Red Sea and elsewhere as well, we know it's going to have a knock-on impact in terms of economics on shipping costs, on supply chains, on time for production to get to market. But it's really difficult to price in the actual risk and whether you continue to see an escalation in tensions there as well, particularly after the attack on the US base in Jordan.
Yeah.
It's just very difficult to price it in. So I don't know that the market's necessarily being complacent. It's how do you price that other than looking as best you can at the economic fundamentals.
And so from your perspective, thinking about how this plays into the fundamentals, this is all about what this does to inflation, expectations of inflation or inflation in the moment, I suppose. Thinking about inflation, we just had this number out of Spain, which came in kind of quite hot, half a percentage point hotter than had been anticipated. And like we've just been saying, Spain wasn't the source of our concerns really about inflation over recent months. So maybe we put that to one side, or maybe it is just that reminder that inflation doesn't go down in a straight line and that some of these last hard yards will be harder, Marilyn.
I think that's right. I mean, in the Eurozone, we've definitely seen inflation trending down pretty nicely, and the ECB last week even acknowledged that actually its inflation is coming down far quicker than they expected themselves. But we do expect it to be bumping. We certainly don't expect it to come down in a straight line, particularly when you look at the Eurozone and you have pretty diverse economies. If you compare Germany with Spain, with Greece, you wouldn't expect them to come down uniformly in terms of inflation, and the underlying economics and the dynamics are incredibly different. But I think also when you are looking at inflation, if you look at the impact that we've seen from everything from energy prices in particular in areas of Europe through to demand from other parts of the world, through to these geopolitical tensions that you mentioned, you would expect it to be bumpy, I think, given that inflation was high for a very long time. But some of the underlying reasons for that are pretty tricky when you can think about, coming out of COVID and all of the supply chain issues there. Then you look at Ukraine and the impact on energy. We've had some quite strange catalysts in terms of inflation, and I don't think you would expect, as it continues to normalise as it is now, you wouldn't expect it to be a smooth ride down.
Morning.
Morning.
Did you... Yesterday was a surprise to me. I thought we'd get a bigger reaction to that lower number out of the Treasury. I thought that yields would come down significantly more. We're not going to get the supply that we anticipated. The refinancing is much lower. I appreciate we're going to get some more data later on this week. But does that undermine the case that actually this market is being driven by supply? It is still really about the Fed. It's not about that supply dynamic. Did yesterday change the calculation?
So it didn't change it a huge amount. Obviously, it was a big surprise that it came in a lot lower than was expected, and it suggests that the fiscal situation is better than expected. But I think the market is really focused on the Fed. I mean, we've seen that in the volatility, in the repricing that we've seen in the Treasury market. I think the market is really focused on the Fed this week. It's focused on the underlying dynamics, and when we might see that first cut from the Fed. I mean, there's been a lot of talk as well around maybe slowing down quantitative tightening. Maybe making alterations there to slow that down and to effectively
what do you expect from the Fed? What do you think is going to happen this week? You're normally to be found in Florida. The US economy feels like it's re-accelerating right now. The data are getting better and better. We're going to see some JOLTS data later on, but the data generally look pretty good. Does the Fed need to kind of pivot off the pivot? Do we need to get a slightly sort of tougher set of language out of Powell this time around? Do you think he pushes back on equity markets that are loosening financial conditions? What do you think is going to happen?
So we certainly expect no change from the Fed in terms of its policy. Our view is still that it's most likely that the Fed will probably move in May or June. When you look at the underlying economic fundamentals, you continue to have a very tight labour market that is loosening on the margins, but it remains incredibly tight. Activity remains very, very tight. Inflation is certainly coming down. And so we're seeing a lot of positives in all directions, but there's no need for the Fed to rush into moving anytime soon. And we think they'll probably just push back a little bit on the market pricing that still has a little bit priced in for March. And we think they just want to, reinforce the message.
So March gets taken off the table?
Well, we think in terms of the Fed, they're more likely to try and push back a little bit and really, emphasize that they want stability, and, they'll probably pause for an extended period. And then our best guess is that it'll be May or June when they finally do actually start to cut rates.
Marilyn, the Fed famously does not move when geopolitics are at play. The exception, however, being A.J. Powell's early term when he actually had that insurance rate cut around the Trump trade war. You started off the segment by saying this is a market that doesn't know how to price the geopolitical tensions. But I'm curious why, when we've just done this in the last kind of presidential term where geopolitics was the driving force for markets. And I'm curious why you can't put a number on it. What information are we missing?
So it depends on the risk and where the source of risk is coming from, because we obviously don't know what's going to happen in the Middle East and the issues around the Red Sea. We can't know what the US is going to do or what other parties involved are going to do. So that's the issue. We have less clarity than we might have in terms of a political party or a president and what they might do.
Sure, but there's a commodities move, there's a trade move. You can quantify some of the shipping volumes that are moving around.
So you can certainly quantify some of those. You can also, what we particularly do is we look at stress testing a range of different factors. So whether it's the price of energy, the price of oil, shipping, we can try and look at different risk scenarios and what we think will happen to different asset classes if we see certain moves.
Yeah.
And then we can put on hedges, or we can, estimate whether we're happy with the risk return potential in portfolios. But that's the best we can do, is come up with scenarios, price for those, and then look at whether we're happy with the risks involved.
A lot of game theory, a lot of prisoners dilemma involved. We thank you so much. Marilyn Watson, head of global fundamental fixed income strategy over at BlackRock, giving us that crucial perspective. In the meantime, we go from the macro to the micro. Let's get some more on the individual stocks on the move. Joe Easton's all over that story. Joe.
So we are seeing a 3% decline in Diageo at the moment in London. As we said earlier, another shocker from them. Half-year sales are down, and they're warning once again of a 20% drop in Latin American sales due to too much inventory over there. The US pretty weak as well, though Guinness supporting the sales in Europe. That's really the only bright spot for that one at the moment. Then in terms of Deliveroo, this is an interesting one. Delivery Hero exiting its stake in Deliveroo. That one broke last night. They're selling those shares at a discount. And we're actually seeing Delivery Hero dropping as well. So investors potentially thinking they sold out of that one a little bit too quickly maybe. But that one, as I said, is at a discount. So both of those coming down in the red today. Pets at Home, we've got a warning from them out today, a decline in sales. It is quite a resilient part of the market, tends to be a little bit defensive even, but Pets at Home, warning of weaker sales, and those shares are dropping 6%. We'll reuse some of the old puns. Those investors are in the doghouse at the moment. I think I did use that one last earnings season, but I tend to keep going back through them. That rally taking a bit of a pause maybe, but we'll have a look at Hapag-Lloyd. This one is over in the shipping space. All the focus on the Red Sea at the moment, given the rising rates, but Hapag dropping their sales actually weaker than expected. They're not yet seeing that boost in their earnings. That may come later, given the rising rates that we've seen over in the shipping space at the moment. Renault did pop at the open, cancelling the Ampere IPO, getting a positive read from a lot of analysts that I've been reading this morning. That one was up about 4%, one of the best performers, but now coming down up 1.8% at the moment. And BBVA holding up. Weakness in the Spanish net interest income is the main takeaway from that one. But trading revenue better than expected. Some of the investment banking fees were actually doing a bit better than some analysts on the street were expecting. In terms of white goods, we brought up Electrolux because Whirlpool last night in the US, weak sales, warning that Americans are shying away from big ticket items for new houses. So that one weighing on Electrolux. And then finally on the last board, we'll flip over and do WPP, because look at that one. That one is the biggest gain since February last year for WPP. As Guy was mentioning earlier about the AI investments, potentially that will reduce costs, potentially some headcount reductions there. That one gaining 7% now. Lufthansa, this one is upgraded over at Morgan Stanley, given their exposure to the freight market. They prefer that one to IAG. And then there's a note from Bank of America on UK home builders. They think the rally in UK home builders has gone too far. Those hopes of rate cuts are overdone, according to them. So they actually downgrade Persimmon, but they think Taylor Wimpey is worth buying on valuation grounds. So both of those stocks moving in London.
Joe, thanks so much. Joe Eason from our equities team with some of the moves you need to be aware of this morning. We will certainly return to those stories. Really fascinating to see the Renault story and the Diageo story playing out really strongly and loudly across European markets. We'll deep dive into the analysis shortly. This is Bloomberg.
I think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday?
You can't waste any more time.
It's our all-hands-on-deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
So this would be a carbon-neutral jet fuel.
A little worm that can actually dissolve plastic.
Creating clouds. This is the definition of thinking outside the box.
I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist's guide to the planet.
Jamie Lannister on the runway.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Was going to keep winning World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the home of our biggest business, FanDuel, and I think for us to have access to the world's biggest capital market is something which we're very excited about.
Okay, that was the Flutter CEO, Peter Jackson, speaking to Bloomberg on plans to list in New York. Sam Elstead joins us from the Markets Today blog, and this is something that we've talked about with him many times, and he continues to cover on the blog, of course. So I mean, this is a part of a trend, isn't it? It's European business, in particular London-listed businesses, I know is your focus, either moving their listing to the US, and that might be what is happening here with the primary listing. We'll wait to see what the shareholders say. That's the plan. Yeah. But certainly a secondary listing, and that's what we've seen already enacted, taking place yesterday. I'm trying hard not to take this personally, Sam.
No need to take it personally, I don't think. For the gambling industry, this has been going on for a few years, right? So as soon as the US has started to open up, you've got a huge market. And not only that, you've got companies over here, so in the shape of Flutter, Entain as well, which has a big joint venture in the US. They are really experienced in the gambling industry. So they are watching state by state open up to gambling and to sports betting. And they have the expertise to capitalize.
There's a kind of fundamental reason for doing it, which is, as you say, our business is over there, we're going to grow over there, it's going to be great over there. But it's the financial engineering side of things. That kind of, we spoke to Holcim yesterday, that's got to be the narrative there. You are basically looking for that higher US multiple. Why would you not do that?
It's interesting because this combines the specifics of a business that it makes sense for and also that broader trend. Because in the Flutter case, it's interesting how our colleague in the US introduced them as the parent of FanDuel.
Yeah.
What this business used to be was Paddy Power and Betfair.
That's right. Yeah.
Which is a totally different business model, and I doubt trades on the same kind of multiples as something like FanDuel. But that's where the emphasis now, that's where the growth is.
Yeah, it doesn't. But actually, the cement companies, so with Holcim, what we've also had previously other building materials companies, CRH, another Irish company, Ferguson, who have effectively moved their entire business to the US. They've always made most of their money there. And again, they can go and list over there and move basically their entire investor base over there, and the multiple is significantly higher.
The private equity side of this story is just the kind of the flip side of the same thing. It's interesting. You look at UK companies being taken out again and again and again by private equity, low multiples they're paying. You're getting a premium off what the stock price is doing, but the stock market cannot value this stuff properly, it seems. Private equity sees the value, management sees the value. The question is, what was it going to take to get European investors to see the value?
Yeah, I mean, actually, you're not only just private equity, but trade buyers too. Seeing this, there's a huge disconnect between what a potential buyer is seeing as value in a lot of UK-listed companies and what the market is listing them at. And actually, over the course of this year, so we had a nice story yesterday about that 25% of companies have come off the London Market. The market has got 25% smaller. That's likely to continue across certainly this year. There's no real indication there's going to be a huge pickup in IPO activity. You're getting sort of rumblings, but nothing really major. And what you've got this year is an economy that doesn't look particularly strong, really cheap valuations, which don't look like they're going to go anywhere anytime soon. And so with all that money, with that dry powder there for private equity or for trade buyers, if they see that there is a long-term value in these stocks, then you're likely to see even more London-listed companies go this year.
All right, Sam Unstead from our Markets Today blog, we thank you so much. Of course, you can get more from him and the team on the front page of the Bloomberg UK website. All you got to do is type in TLIV GO on your Bloomberg terminal. Look, very quickly, I just want to make the point that what he talks about is not just a question of multiples and access, but you have the Euronext CEO said we are just now getting around to a consolidated tape. That is a very new development in the European story.
Yeah, that is. Also, the volume story was something that Flutter cited, which I thought was really interesting, because they were making the point that if you go to the US, you get higher volumes being traded, and then some of your shareholders feel more comfortable taking a bigger stake. That was the argument.
You also get the research, you get all kinds of other things that go with it as well, which you don't necessarily get over here. So the stocks are just better covered.
Yeah.
Well, certainly something that we are watching very, very closely. In the meantime, we, of course, still have our eye on Diageo slumping after disappointing investors again after that demand for expensive spirits slumped in the Americas. Weakness in sales for high-end spirits has spread from the U.S. to China, with other luxury brands reporting mixed results. There's a lot to digest there. Apparently, people are drinking, but they're not drinking as much as they used to be drinking. Joining us now to discuss the outlook for the sector, Switha Ramachandran, fund manager over at Artemis, responsible for leading their consumer brand strategy. So why aren't people drinking anymore? What's going on?
So people are drinking, but they're drinking less expensive drinks. I think in the wake of the pandemic, everyone was flush with excess savings. A revenge conviviality is what the CEO of Campari called this trend. And now everyone's sobering up after the party. And so this trend of drinking less is definitely taking its toll on Diageo.
Does that then mean that there is going to be some sort of read-through in terms of pricing? Does there have to be pressure then on some of these big makers like Diageo, but others like Constellation Brands, Molson Coors, et cetera, that have already pushed pricing ahead? Does Diageo have some catching up to do?
So actually, that's the theme of the first half results for Diageo, is that most of the growth, in fact, their volumes are in decline. The mix, which is the percentage of people trading up, that's coming down. So most of the growth has been price-led. And the question is, in a wider and disinflationary environment, how much pricing power do they legitimately have that can allow them to keep pushing prices through? And I think that's the question mark going ahead, because already there's, I would say, quite an alarming share statistic, which is that they have lost share in the first half of the year in 70% of their portfolio, versus only 25% the year prior. So I think those kind of share losses could be indicative of a wider down trading, which is going to take quite a long time to fix.
Okay, yeah, and so if premiumization was the thing we saw post-pandemic, what's the next thing? That'll be part of the conversation when we speak to the CEO. Thinking more broadly about the luxury space, we talk almost daily about the difficulties in the Chinese equity market and the difficulties in trying to turn a corner on the Chinese economic story. How do you square that with the strengths that we've seen in some of the luxury names? Because it has been quite mixed, hasn't it? With LVMH and Richemont doing okay and others doing less so.
So I think that's exactly what we're seeing now, is this bifurcation between the top-tier brands and pretty much everybody else. Because it's not that the Chinese luxury market is dead. The middle class is still expanding, albeit at a slower pace as economic growth is slowing. However, there's still a strong appetite. It's just that consumers, in this environment are very much concentrating their purchases on iconic top-tier brands, as well as perhaps niche brands that have a very strong positioning in their segment. But pretty much everyone else is falling by the wayside, not quite as dramatically, but you can see that on the same day that LVMH astounded the market, Ferragamo, for example, had sales out which went a little unnoticed. They were down 9% versus LVMH up 9%. So huge bifurcation happening between the must-have brands and the not so desirable ones.
And Burberry disappointed, of course, as well. Bringing these two things together and thinking about drinks and where the Chinese story goes. Last time I spoke to you, Sweta, we were talking about a Chinese clampdown on some European sales of luxury spirits into China. How much lasting damage is that going to do? Now we know more detail about what's happening there.
Yeah, so that anti-dumping investigation on EU cognac exports into China is still underway. It's suggested that they may look for a 16% tariff, which could be manageable through combination of price increases and efficiencies. Of course, nothing is final yet. And as we have seen, it seems more of a political kind of a chip, a bargaining tool in retaliation for the EU investigation on EV subsidies than anything else. So we would need a wider settlement for that issue to be clarified.
Can I just come back to the issue you raised about Diageo? You talked about the fact they're losing market share. Are they losing market share because they're holding on to their pricing?
Well, they alluded to the fact that the majority of the share losses are from the U.S. market, which is the biggest market. So that would certainly be a fair assumption. The downtrading in the U.S. market, where consumers are shifting to lower-priced spirits, could be one significant driver of that share loss.
Right. So, but it'll be interesting to see, therefore, whether or not they ultimately, how long can that last for?
I think their solution is to try to invest more in marketing and investment to try to boost desirability of those more expensive brands rather than to cut prices. But of course, you're right. That is the question mark on the pace and magnitude of the recovery into FY25, for which their outlook is still somewhat tepid.
Yeah. Well, let's talk about their strategy right here in Europe as well. You said that the U.S. is their biggest market. How do they grow that market share in Europe, specifically with something like tequila, for example, which is kind of new and upcoming?
Yeah, it's interesting because there's always this notion that tequila should internationalize. But if we look at gin, for example, it really hasn't gone global. I mean, sometimes spirits are very local to particular tastes. There's some indication that in the UK, for example, high-end tequila there is certainly appetite for it. But I'm not sure it necessarily will go global in the same way that maybe Scotch has, for example. Yeah. So some of these categories tend to be quite local, but they can gain share, for example, through expanding more with their local regional portfolio. They have a very strong Scotch portfolio, which does very well in Spain. So those might be better routes for market share expansion than tequila.
Sweta, thanks so much. Sweta Ramachandran, fund manager at Artemis. Thank you very much. Another sector really in focus is anything to do with EV. And of course, we had the news from Renault just last night. Now, VW is set to push back on its battery unit IPO plans as the market cools. And this really fascinating development, we saw this in the European car registrations, a Ford story recently, a lot of threads to the cooling of the EV story.
What I find really fascinating is less what's happening here in Europe, what's happening in the States. The States are not taking up EVs in the way that we're seeing maybe elsewhere around the world. Hybrids, yes.
Where you have space for parking as well.
Well, precisely. and I do wonder whether or not ultimately we're going to it's going to be sort of 2 steps forward, 1 step back. We're going to go back to the hybrid model.
It's an affordability question. It is still cheaper to have a gas-guzzling vehicle than an EV because there is no infrastructure in the US the way there is in the EU.
Okay, and even that is limited in some places. Coming up on the programme, after that profit miss on waning demand for pricey spirits in the Americas, we will talk to the CEO of Diageo. Deborah Crew joins us shortly. That's next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I
don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
This is Markets Today. We're about 30 minutes into the European trading day. It's a sum of all parts trade. You are seeing some of the stock movers actually weigh on the market, others moving in the opposite direction, but a lot of people kind of sitting on the sidelines when it comes to the macro trade. Look, you've got geopolitics, you've got the Fed, you've got the BOE as well, and then on top of that, a slew of corporate earnings on both sides of the Atlantic. Anna Guy, we've been talking a lot about tech earnings this week in particular, but even right here in Europe, plenty to move the market.
Yeah, I like the WPP story. I think is interesting. A, it's upgraded its guidance. I know you keep laughing at me coming back to this, but I think
It's like the 17th time you've mentioned it.
I love the fact that you mentioned AI and the stock goes up. Just kind of, it still tickles me.
If Guy says it enough times, maybe WPP stock will go up.
It is up. It's up 5.3%. Second biggest gainer.
The Guy effect.
but I think the market again. We're sitting back. We've bounced off our lows, but I think the market's going to trade in a relative. Equities will probably trade in quite a tight range.
Okay, and what is not trading in a tight range is some of the individual stocks. You mentioned WPP. Yep. Renault, of course, in focus. We also brought you the VW line a moment ago. So lots of interesting parts on the move when it comes to the EV space. But also, we talked about Sweta Ramachandran about the premiumization of the drinks sector, and that's something we want to get into next. Diageo shares lower this morning after the world's biggest distiller reported a decline in earnings. A slowdown in North America compounded a collapse in demand for expensive spirits in Latin America and the Caribbean. That was the story last quarter. We see a bit more of that this time. Let's talk to Diageo's CEO, Deborah Crew, who can really take us inside this business and help us understand what's happening. Deborah, thank you so much for being with us today. I understand you've reiterated your medium-term guidance today, despite disappointments, I suppose, for many around the first half performance. What gives you the confidence that you can still meet that medium-term guidance?
You know, no doubt it's been a challenging last 6 months for Diageo and really the sector. You know, but as you mentioned, we did end up in line with what we said we would back in November. And if you exclude our Latin America business, our group organic net sales grew 2.5% on the half, and that was with good growth in Europe, Asia Pacific, and Africa. And we have great highlights underneath this. Our global beer business, led by Guinness, plus 14%. I've talked about taking tequila around the world, so if you exclude kind of NAM and LAC, where of course tequila's been for a long time, and you look through the other regions, we doubled net sales in tequila. You know, we also had great growth in China, plus 18%. We had strong growth in India, plus 9%, lapping double digits. Johnny Walker, plus 21%. So there's a lot of good news underneath of that, and that really is what underpins our strength, you know, across the medium term. So we are navigating in the near term. Yeah.
Yeah, so those are the strengths, those are the areas of strength. So outside of Latin America, more positives to point to. You talk about tequila around the world and to Guinness as well. But what about the United States business? What's the position on pricing there and your willingness to compete on price in that business? Do you compete on price if that's what everybody else is doing, or do you stick with your premiumization strategy?
Yeah, look, so, North America for the half, we did have the minus 1.5%. That being said, it was sequential improvement, which is what we were looking for. We were lapping, the U.S. market is still normalizing from the super cycle of COVID. And so we've seen some supply chain disruptions, but also the consumer is also normalizing, getting back to that kind of a post-COVID new normal. And within that, there is certainly some pressure on the consumer. There's still relatively high food basket prices, still tackling inflation. That being said, it's a resilient consumer, and they are willing to spend on things that matter to them. And when you look across our portfolio, we do have strength in our super premium priced products. If you look at what's growing in the industry right now, it is all super premium priced products in the U.S. Actually, value, so premium and below, is declining. So we are still seeing consumers come in to premium prices. It was an intense competitive environment. And we are focused on winning high quality market share. We're not just chasing, we're not going to erode profitability and brand equity by chasing, a couple basis points of share. This is about high quality market share. And actually in North America, we did expand operating margins while investing A&P on the half. So I think showed good discipline there. We certainly want to get back to high quality market share growth. And I think we've got good plans in the second half to go after that.
Well, Deborah, you talk about it being a competitive space. If you look at your two main competitors there, Constellation Brands, Molson Coors, they have actually used that strategy where in order to make up for the drop in margins, they've increased their pricing. I understand that you want to go after the high quality product, but for how long when your competitors are talking about price hikes? When will you?
Yeah, so look, from a portfolio standpoint, we actually have a very broad portfolio. It's really unrivaled, and we are by far the biggest player, and we go across price points and categories, and so really can go wherever the consumer goes. And within that, we're very surgical when we do pricing. But we did have good price mix in the half. It was better than volume and offset some of the volume decline. So we're very surgical about it. We look at it consumer backed.
So let me be clear then. It kind of sounds like you don't have any price hikes in the pipeline at the moment. I understand that you have a very nuanced approach to it, but again, relative to your competitors, can I be clear? No price hikes from Diageo.
Well, I think, look, pricing is something that we look at on a state-by-state, product-by-product, basis. So, I think for competitive reasons, we're not going to talk about where we're putting pricing. But that being said, this is it's a dynamic market. We've got a lot of great innovation launching in the second half that we really, are excited about, and we know we can drive growth on the back of that. We had 7 of the top 10 innovations in the first half, and we look to build on that in the second half.
Deborah, good morning. It's Guy. You've had a pretty tough start. The last set of earnings caught everybody by surprise. This set of earnings going down, not that well either. The stock's just off a 52-week low. What's the message to investors this morning? Is the bad news now behind you? Is this the bottom? Is this the kitchen sink? Does it get better from here?
Well, as we announced this morning, we are looking for improvement in the second half on our top line versus what we delivered in the first half, and we're looking at gradual improvement, and that's off the back of gradual improvement in North America. We also announced that we look to reduce the inventory levels in Latin America back to an appropriate level for the consumer environment there, and we're still looking at growth across our other regions. As a reminder, we had good growth in Europe and Asia Pac and Africa in the first half. And so, we look on gradual improvement, and then we even put out guidance for fiscal 25 that as the consumer environment improves, we look to progress that growth further.
Deborah, what's the background to all of this? Let's talk about what is happening around the world. What kind of inflation rate are you seeing? What kind of margin pressure are you seeing right now? What impact would a Fed rate cuts have on your business in North America? Are you relying on other factors to, in the middle of the P&L, maybe to have a beneficial effect at this stage? I'm just wondering what kind of the cost picture is, and I'm wondering what you think may give the consumer a boost and help you out as well.
Yeah, I think, look, we do see a very uneven consumer environment out there. There is a lot of uncertainty in that. But we look at controlling the controllables, and some of that we demonstrated in the half. Productivity, we delivered $335 million in productivity in the half. That was record productivity. So seeing some moderating, I would say, of inflation. Still, inflation's kind of hanging in there, but it is moderating. And so, we also had very strong cash generation. We delivered $1.5 billion in cash. That was $500 million higher than prior year. So, we are controlling the controllables in the middle of this. And look, we do see the consumer environment improving. We just think it's going to be gradual. It could be 6 months, but it could certainly take longer.
Deborah, thanks so much for joining us. The CEO of Diageo, Deborah Crew, with us this morning to talk about the numbers. Coming up, hundreds of tractors block roads leading into the French capital as protesters plan to twist the government's arm into more concessions for the sector. We'll bring you the latest. This is Bloomberg.
Successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. We started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And frankly, when people leave 23andMe, I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. I want to build out a true consumer-empowered healthcare world, one that is outside of the existing system. And there's no greater force than government.
markets today. We're about 43 minutes into the European trading day. Green on the screen when you look at those equity markets across the continent. Look across asset, though, it's a little bit of a different story. Oil, for example, down by about 0.4%, 82 handle on Brent crude. A little bit of a divergence in risk sentiment between the equity market and all of the other assets. In the meantime, top business leaders and governments are in Florence today at the annual Baker Hughes conference discussing some of that energy security story. Alex Steele is on site, really having the time of her life. Alex, over to you.
All right, Kriti, thank you so much. So I'm joined now by Paul Marsden. He is the president of Bechtel Energy. Now, Bechtel is a private company. It's been around for 126 years, and it has lots of divisions. And energy in particular has built 30% of LNG export capacity all around the world and is responsible currently for about 45 million tons per annum a year in terms of build-out. Net, it's huge and it's important. Paul, it's so good to see you. Thank you for joining.
Yeah, it's great to be here.
Okay, so let's just start with the news, which is the moratorium on new projects to non-FTA approved countries for LNG exports. What's your take? Does it affect your business?
So, first of all, we believe in a robust regulatory framework is absolutely the right thing to do. Being held to account, how you design, how you build. We have a long-standing relationship with all the regulators. We've been working with them for many years. We built out all this capacity on the U.S. Gulf Coast. So we really believe in the fundamentals of the program. And we've been here before. There's been these pauses. There was one in 2018. There was one in 2012 where the administration chose to go and make their assessments of how they make their assessments. And we've been there before.
Okay, does it change your order book? Does it change where you may look for customers?
No, it fundamentally doesn't.
Okay.
We absolutely believe in how robust the LNG market is, and the customers that we're working with have terrific projects, and we're going to work through this framework. So we're going to support them in doing that, and we don't believe it's going to affect us in the long term.
So I said that you're in the process of building 13 LNG trains that represent 45 million tons per annum of LNG capacity. It's enormous. What are some hurdles in building that? And I'm looking for things like inflation, high cost of yields, for example, or debt. Are we looking at jobs? Like, what hinders that from happening in the way you want it to?
So, as we come off the back, excuse me, of the pandemic, we saw stress in the supply chain as the world came back, and there was stimulus that came in the economy through things like the IRA. Certainly put some stress in the supply chain. I think we're starting to see some of that in the rearview mirror today, and some things starting to return back to normal. But what is a challenge, is going to remain a challenge, is the workforce, which is the skilled labor that we need.
Are you having to pay up for more labor, or are you just not going to lay off any labor, or how do you manage that?
No, I think the really big challenge is that we have a huge demand. Just the work that we currently have is going to, over 40,000 people are going to be employed just in the work that we're doing in LNG.
Wow.
And then you think about that through the lens of what everybody else is doing too. You think about the new energies environment that's being stimulated, things like the Inflation Reduction Act. It's creating a huge demand for skilled labor, and that's certainly something, particularly in North America, that's going to be a challenge today, and it's going to be a challenge in the future. We've got to train people. We've got to develop that workforce of the future.
So aside from that, you mentioned supply chains easing themselves out, but then we have the disruptions in the Red Sea. Is that causing supply chain issues for you anywhere in the world? You guys operate all across the world.
Yeah. So the supply chain it's big, it's global, and it's complex. That's never changed. So how things move around the world, sure, they're going to have some impacts on things like what's happening, disruptions in the Red Sea. But supply chain has a remarkability to rewire itself as well, and weather these storms that are out in front of us, and I think it'll be the same again.
So here we're talking a lot about LNG, and it's no doubt that the industry is looking towards LNG over the next, say, decade plus. Give me insight into the new energy stuff. Like, what's going to be the thing that we're using in 20 years? Because if I'm going to build something, you're the first person I'm calling to say, hey, help me build that hydrogen plant. Help me build that biofuel plant. Help me build that LNG terminal.
So we think LNG is going to be generational. It's not something for the next 10 years. It's certainly out the 2030, 2050, everything we heard about net zero. LNG has got a huge role to play in that. largely because there's a mature market for it. We know how to build the export capacity. We know how to build the regas capacity to bring it back into a country. It's going to be a huge part to play in the future, and for as long as LNG can continue to displace coal, that's a direct positive impact on emissions. So here to stay. But likewise, there's going to be a new landscape in the future that's going to be renewable power generation, but it has vulnerabilities to it. We are sure that there's going to be another renaissance in nuclear, which is it's clean, it's reliable, base load power. We're certainly going to see that. But we're going to, there are new fuels. Is there going to be a large hydrogen economy? I don't know. Hydrogen's, sure, it's really clean when you look at it in terms of its emissions.
Yeah.
But there's a lot of complexities to it as well. It's very difficult to handle as a cryogenic liquid. It takes a lot of energy to make it. It takes a lot of energy to actually then use it. But technology's going to play a huge role in that in the future.
Yeah.
Just like battery technology, the accelerations we've seen in that just in the last decade, I'm sure that's going to come to bear. But is there going to be a huge hydrogen economy? I don't know.
Paul, so great. I love that you can say, I don't know, and you're the guy that's going to build all this stuff. Paul Marsden, he is president of Bechtel Energy. Thank you so much. Guy, I'll throw it back to you. It's like not a done deal. There's still a lot of question marks on what actually is able to get built.
Okay. Alex, I know you've been having fun. You're going to carry on having fun. I will say to every Italian shop owner out there, just get ready. Be prepared. Alex is coming. Alex Steele at the Baker Hughes annual conference in Florence, Italy. She's been looking forward to this for quite some time. Where else would you find Florence?
I'm sure Christy can answer that question. Coming up, in fact, I can't remember. So, yes, she might have to. Sticking with the energy theme, coming up later today, we'll be speaking to the co-founder of Bluebell Capital Partners after the hedge fund called on BP to bolster investments into oil and gas and cut spending on clean energy. So don't miss that conversation. 9:10 a.m. London time. It's all about the energy transition conversation and how much we want that to be done by oil majors and how much we want that to be done by other businesses. Now, let's move on. The French government's planning fresh steps to address farmers' concerns over rising costs and European regulations as protesters continue to block highways around Paris. All this happening as GDP data is reported this morning from France, from Germany, from Spain, Italy, and the wider Euro area. We had the French number just a couple of hours ago, in fact. Bloomberg's Oliver Crook is in Berlin. But first, let's go to Caroline Conan, who joins us from Paris. Caroline, let's come to you first on the European story. So how disruptive have these protests been? I was listening to somebody yesterday talking about whether it was or was not possible to still get to the airport. Give us a sense of how disruptive this is.
The French government has actually deployed 15,000 police officers to try and keep the access to the two major airports around Paris and also to Rungis, which is the wholesale food market where all the French restaurants and shops actually get their food supplies for the French capital. In fact, this morning you have about 5 major motorways around Paris still blocked by farmers, and also 200 tractors are actually on their way to this wholesale market. They've been blocked once by the police, and now they're trying to exit the motorway to still block this very symbolic place where they say that imported food actually causes them to lose revenue because this imported food doesn't have the same environmental regulations as they have in France. So as many as 10,000 French farmers are currently protesting across the country over the weekend in the countryside. I saw hundreds of them at some roundabouts and on motorways between big cities. Some of them had signs saying they earn as little as 400 euros a month for a 70-hour work week. So, of course, they are very angry about the situation, about the increase in cost, about the competition from foreign agricultural products, including those coming from Ukraine. So the situation might continue. Demonstrations, of course, are also growing across the continent. You saw Germany. Now you also have the French farmers. And yesterday also Belgium started joining these massive farmers' demonstrations.
Well, talk to us about what the government response actually looks like.
in fact, this afternoon, the new 34-year-old Prime Minister Gabriel Attal, who was named just 2 weeks ago, is supposed to do his general policy speech in front of the French Parliament. This was supposed to be his big moment to talk about tech, to talk about education, to talk about the French economic rearmament, which is what Macron said during his New Year's speech. But of course, all this is going to be totally overshadowed by the farmers' protest. We expect some new measures to come later this afternoon. Already, Gabriel Attal announced some measures last Friday, including the end of the phasing out of these diesel tax hikes for these tractors and those machinery, but that's insufficient for some of the unions who want also a minimum price guaranteed for their products and who also want to renegotiate some trade agreements. And in fact, we had a story coming out today saying the president, Emmanuel Macron, will put pressure on Thursday in Brussels to try and block the Mercosur trade agreement with South America.
Carolyn, great stuff. Thank you very much indeed. Carolyn Conan gets to be our tractor correspondent for the day. Gets to go out, spot tractors. Fantastic job. The other day, it was Ollie Crook because the tractors were in Berlin. In a few minutes' time, we are going to be seeing German GDP data. Ollie, is that data going to be affected by what the farmers were protesting against in Germany? Just talk me through the data and what impact it's going to have here.
Well, it's really not going to have an impact in the fourth quarter, but it will definitely have an impact going forward, which in some ways is more important. Less spending from the government, fewer subsidies, all this sort of stuff. That's going to come into 2024. We're still expecting a contraction of 0.3% here in Germany, and it's really the downside risk to European growth more broadly. European growth, everybody's calling Germany the sick man of Europe, and everybody in terms of policymakers in Germany are going to great lengths and sort of euphemistic acrobatics to find out why it is. And listen to Christian Lindner.
Germany is not the sick man. Germany is a tired man after a short night. And now we have a good cup of coffee, which means structural reforms.
So the tired man of Europe needs a cup of coffee in the form of structural reform. Big difference between coffee and structural reform. One, it does not taste good going down, and two, it doesn't kick in quickly, the evidence of which are the farmers in the street.
Talk to us a little bit about the corporate story then. When we're talking about VW, you talked about a little bit the macro, the geopolitics. Talks about VW reversing plans for IPOing its battery unit.
Yeah, it's not been a very good 24 hours for the EV space here in Europe. First, you had Renault scrapping the IPO of Ampere, which is their EV unit. Now, Volkswagen coming out basically saying that they're not going to list this year or next year PowerCo, which is their battery-making part of their business that they're trying to roll out. Remember, Volkswagen is spending $180 billion over the next 5 years to try to get to grips with this transition. This is not really an encouraging sign. Yes, the IPO market is a little bit weak, but really there's a lot of questions swirling about this sort of EVs going forward. There's questions about whether Volkswagen is able to competitively make batteries, to make them at scale, and all of this is coming to bear in a very real way and then pulling back from the market here.
Ollie, thanks very much. Bloomberg's Oliver Crook with the latest on a number of threads running through the German story this morning. Certainly the GDP figure will be interesting. That breaks shortly, just in a few minutes, in fact. We'll look down for those numbers crossing the Bloomberg terminal. In terms of stocks on the move today, we've got the media sector, actually, the best performing sector.
Go on, say it.
All credit to Guy for spotting that one at 7. But Diageo at the other end of the spectrum. So Diageo weighs, WP does well.
WPP having a good day. It's been a while, so it's going to be interesting. Mention AI and things do well. Well, that takes us on. Tech is going to be the big story later. From Credit, Anna and myself, have a great day. This is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
World of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. France narrowly escapes a recession while the Spanish economy soars, offering hope that the euro area can also dodge a downturn. Saudi Aramco abandons a plan to boost its oil output capacity in a huge reversal that will raise questions about the kingdom's view on future oil demand. Plus, Elon Musk says the first human patient has received a brain implant from his startup Neuralink, which aims to one day let humans control computers with their minds. Now, also coming up, interviews with the hedge fund pressuring BP to bolster oil and gas. We'll also speak to the chief executives of the Italian gas network operator Snam and Novonesis. This is a new biotech company formed by the biggest merger in Danish history. Now, first thing is first, let's take a look at the European markets map. There is, I have to say, quite a lot going on. We look at also the UK. We had store inflation, looking at the easing somewhat of the cost of living crisis. We have the Bank of England looking at the credit markets. We're also getting that German preliminary fourth quarter GDP falling 0.3%, pretty much as expected. Now, we were, of course, reminded also by Oliver Crook, who was on air looking at some of the downfalls of the German economy, exactly the kickstart, some of the reforms, and whether at some point they will kick in. We did speak to the German finance minister just a couple of weeks ago, where he says, look, this is not the man of Europe. It just needs a coffee, and it's a tired man for the moment. The other thing we look at, of course, is earnings. There's a big test for a lot of the tech companies. Today, I think investors are looking forward to a rush of major earnings for insights on whether the record-breaking rally on Wall Street can continue, which is why we're seeing maybe a little bit of muted stocks across the board here in Europe. Now, we're joined by Morgan Deladon, the head of investment strategy of Global X ETFs, to look at the markets today and beyond. We're also joined by Bloomberg's Justina Lee. So thank you both for joining us. Justina, brain implants. I don't know whether to cry or to laugh or what to make of this. I mean, stocks, I think, in China are really soaring on the back of this.
Oh, yeah. I mean, it sounds like something out of science fiction, right? But Elon Musk his company has kind of
put this product for the first time in an actual patient. And the vision there is that one day, the people with quadriplegia will be able to control computers with their minds, and that will certainly be a great improvement to kind of their lifestyle. And what kind of Elon Musk said on X is that they're seeing promising neuron spike detection. What that means is that they are getting those recordings from the patient's brain. And so it kind of seems like they already have a name for the first product, and it will be called telepathy. And of course, it's still a long way to actually being a product that will be widely available. I mean, they plan to do 11 more surgeries kind of this year. And so it's kind of a few more steps to kind of proving that it works and that it's safe for humans.
Yeah, it is just quite an incredible story. And I do think, and it's not all Chinese stocks. I misspoke. It's obviously not all Chinese stocks that are gaining on the back of it, but it's Chinese stocks that are actually in the space that really got a boost. Morgan, away from, brain implants, which also technologically could be a game changer, we also just look at the Fed and PCE to try and understand what inflation does. Are you expecting as many cuts as actually the market's pricing in?
I think there is a mismatch, definitely, because when we look at what the market is expecting still now, over 5 cuts for this year, it's a lot given the strength of the U.S. economy. And last week, GDP numbers came out much better than expected, while core PCE is now not far off the objective of 2%. So what it means is even with very tight monetary policy in the U.S., the Fed is achieving its goal of a soft landing towards its objective of maximum employment and price stability. So with everything in mind, I mean, the Fed is definitely going to consider, I think, at the next meeting, starting debate on whether bringing back interest rates to more neutral territory. But I think it's quite premature to think about the Fed turning dovish. There is no urgency for the Fed to cut, given the direction the economy is taking.
And of course, we have this jobs report, right? That will be very interesting ahead of the May decision.
So if the job report is actually surprising the market with an overshoot of 3.8% for unemployment rate in the US, which is what the market is expecting, maybe there will be some volatility around this. But I would expect the job reports to be still strong this week, and therefore I think the Fed is having a little bit pressure off his back to act preemptively.
And Justine, I mean, there was an auction. The auctions are a little bit, or they actually announced how many auctions that they'll put, and they were a little bit, I think, lower than expected. Is there anything else on the Fed Treasury front that you're looking at?
Yeah, I think a really big question for the Fed right now is that even though it is true that U.S. economy has been pretty resilient, I think there's been a lot of chatter recently on the real interest rate, because as you have kind of inflation coming down, what that means is that, minus inflation, the real interest rate has actually kind of gone up given where kind of the Fed funds rate is at. And so there's sort of this narrative out there that does the Fed need to cut just to kind of make sure that they're not still tightening the economy, and given that we might still have lagged effects from tightening earlier kind of still to ripple through the economy.
Justine, it's a big week, of course, for the Bank of England, and then we have this report about stability, maybe them now looking at some of what's going on in credit. I mean, is the BOE now behind the curve in how many, and what it's doing monetary policy-wise?
Yeah, I think that really is a good question here, because we're kind of seeing in a lot of different markets that inflation is coming down, but occasionally you kind of get a little bit of hiccup. It does seem like there was some part of inflation that looked entrenched. I mean, you just look at the Spanish numbers today, still running pretty hot. And I think that is the question here, like, will the BOE kind of act, after the Fed, after the ECB, kind of given the inflationary dynamics here?
And so, Morgan, it's going to be very interesting to see how actually Andrew Bailey, the governor, navigates this in the press conference on Thursday.
Yes, and to Justina's point, I mean, real interest rates, when you look at the UK compared to Europe or the US, in terms of real interest rates, they are lower. So the maneuver that the Bank of England has is actually tighter than the rest of central banks. It's going to be very interesting, but I think they won't, as Justina pointed out, they won't overreact to inflation, given that they're still running far above their objectives.
Morgan, also, I mean, the other thing, I mean, commodities is really left, right, and center today. We're trying to figure out what the Saudi Aramco news means for actually how they believe markets will absorb oil, going forward, actually oil demand. How do you see that navigating? Is it range bound?
It could be, at least for the next several weeks, up to a month, given that oil prices seems to still have some geopolitical premium in the prices that actually prevent oil prices to go down and reflect the deterioration, gradual deterioration of the global economy. So I think that is why we're seeing the range bound in oil prices. But I think it's likely to be a more downward trend towards the end of half of the year, and the end of the year, because the deterioration of the economy is going to be more material.
Justina, we're also expecting, it's the second day in a row where actually European markets kind of open very tentative. I think they want to know what's happening in the U.S. It's all about earnings.
Exactly. We have all the big tech earnings this week, Microsoft and Alphabet, of course. And I think the big question here is, can they justify their valuations? You had JP Morgan strategists saying overnight that this is looking a bit like a dot-com era rally, which is a pretty kind of big warning to issue there. But I think what they're kind of getting at is that, it's true that these Magnificent Seven stocks have posted pretty decent results, but at this point with a U.S. market that's almost, near as concentrated as it's been in kind of many, many decades, can they really kind of justify those valuations, especially if we're going to go into a slower economic growth environment?
And you're seeing also that demand and that interest basically in cloud computing transfer into what your clients are asking from ETFs.
Yes. So just looking at what happened last year, even with high interest rates, the Magnificent Seven caught 60% of the performance of the S&P 500. It's massive, and it's really underlying the trend that there is digitization of the economy underway. So these companies are still innovating, as you just pointed out, with the implant in the brain. Interest rates don't stop innovation, so I do think that the growth potential is still here. On cloud, we've seen a lot of inflows into these strategies because cloud is potentially the first beneficiary of innovations in AI, but also quantum technology. So we really have to now look at these themes as an ecosystem building up as a new sector of the economy, a digital sector.
Yeah, so interesting. I think of superheroes every time I hear Magnificent Seven. I don't know whether that's a good or a bad thing. Yeah, it does sound like that. Morgan Deladon, head of investment strategy Europe at Global X ETFs, actually globally now, head of investment, I think, and Bloomberg's Justina Lee. Both, thank you so much for coming. Now, coming up, we'll be speaking to the co-founder of Bluebell Capital Partners after the hedge fund called on BP to bolster investments into oil and gas and also cut spending on clean energy. We speak to Giuseppe Bivona next. This is Bloomberg.
Connection lost.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Well, Saudi Aramco has abandoned a plan to boost its oil output capacity. It's a huge reversal that will raise questions about the kingdom's view on future oil demand. Now, the surprise move comes after the world's biggest oil exporter had said in November that it was progressing very well with a project to boost capacity to 13 million barrels a day by 2027. Now, staying with oil, and a hedge fund, Bluebell Capital, has called on BP to bolster investments into oil and gas and cut spending on clean energy. Now, it says the company's shift away from fossil fuels is misguided and weighing on the share price. While BP maintains its strategy is still to move into clean energy, but it will continue to invest, they say, in oil and gas. Well, in recent years, Bluebell has launched campaigns against high-profile companies, including the French food group Danone, the British drug maker GSK, and German chemical producer Bayer. Now, for more on all of this, we're joined by the Chief Investment Officer and partner at Bluebell Capital Partners, Giuseppe Bivona. Giuseppe, thank you so much for joining us. So, first of all, can we start with the basics? How big is your position in BP?
Is undisclosed because it's below reporting threshold, and our policy, we don't disclose a stake.
So are you willing to take on a bigger stake? What is your plan right now?
Oh, no, it's clearly, it's undisclosed the position we have, but obviously it's a very significant position for our fund. And let me frame the discussion in the right way, telling, first of all, what we have not asked BP, because I think it's very important, to get to what is our position. I want to make very clear that we have not asked BP essentially to stop investment in clean energy. We are not asking, and we're not asking, we not intend not to ask BP to renegade on that net zero in 2050, which is an objective we absolutely share. So in a nutshell, we're not asking BP to renegade on the strategy. Instead, what are we asking them? Well, we are asking them to recognize that, the condition in the energy demand and supply are rapidly changing, therefore, and today demand is in oil is stronger a few years ago, and therefore they should abandon mechanistic target to cut supply.
Yes, but Giuseppe, so we understand correctly, and I know you don't want to disclose, or you don't have to disclose your position in BP because you're under, the threshold. But can you give us an idea on how big a position? And again,
look, I can tell you, our fund.
How much are you going to go to?
Our fund is it's roughly, we have an AUM for under 50 million, and cyclically we have as much as a co-investment on other vehicles. And we invest in a very concentrated portfolio of, say, 12, 30 stock, not necessarily equally sized. So I think this gives you an order of magnitude of what our stake in BP is. It is a big position for our fund, and I think we are well known to be relentless in pursuing our activist strategy, no matter how big our stakes are.
So, Giuseppe, have you spoken to other investors who share your view?
Obviously, I think there was our interest became public essentially very recently. I think, obviously, we already have certain exchange of views, and there will be more of a debate going forward. But, as I was saying, I think it's important to understand the position. And the position is that, in our view, BP is doing the right things in targeting net zero in 2050, but there is no point of cutting supply when demand is there, at least in the short term. And secondly, it is absolutely fine for us continue to invest in clean energy, provided the two conditions are met. The company invests in business where it has the right to win, so where there's competence, skills in order to succeed, and also invest in business where they target a return above the cost of capital. Now, the company is planning to invest. Sorry.
No, Mr. Bivona, so I understand. So you're basically saying that you know, what you're asking is for them to abandon basically this mechanistic target to cut oil supply. You're not asking BP to go out and buy assets that, for example, Chevron selling or Exxon is selling, or increase exploration activities.
Correct. We are asking BP to adopt the same flexibility which they already adopted, for instance, in February 2023, when they increased production target within the framework of the strategy from 1.5 to 2 million barrels per day. We think that conditions have changed, and they warrant a similar action by increasing production from 2 to 2.5. But BP has self-inflicted, and I would say inflicted on the shareholder, Scope 3 reduction target in 2025 and 2030, which essentially means they have to cut production. This is wrong for the shareholder, but it's wrong for society at large. BP board, unless they change this target, they are really making a favor to the shareholder of Exxon, Chevron, Total, and Shell. But obviously, you know, the board is not paid by those shareholders, it's paid by us.
Saudi Aramco today dropped a plan to boost capacity. This was a major U-turn. Do you think they're seeing peak oil? And again, how does that translate into what BP should be doing?
Look, it's very obvious for any data that we are late in our plans on energy transition. It doesn't mean we are not going to get there. I think there is a lot of data already telling us it's going to be extremely hard to get to net zero in 2050. So, I mean, the most sensitive approach to have a smooth transition is to adapt, you know, to this changing condition and adjust supply according to demand. You know, I would almost say this is common sense.
Mr. Bivona, of course, you have said that you would have asked for Looney's resignation had he not already, of course, resigned. Are there any changes in the leadership of BP that you will be pushing for now?
Of course, no. I mean, we just got a new CEO appointed. There was an internal solution. We are very open to see, you know, with what Murray would say. He was part of the team, probably, who set the strategy, which we are asking not to change but to adapt. I believe that the new CEO it represents a great opportunity to look to the business with fresh eyes and asking about the historical underperformance of BP vis-a-vis its peer, both in the US and in Europe, and the undemanding depressed valuation of the stock. For us, I mean, if the company will adjust production to demand and will stop deploy capital in projects where they target return below the cost of capital, it will lead to a significant repricing of the stock.
I mean, what do you say to critics that say it's odd that you were asking, for example, for BlackRock chief Larry Fink to resign because he was not doing enough on ESG, and now you want BP to change to invest more in oil and gas?
No, that's not correct. We have been asking the resignation of Larry Fink, not because he's not doing enough or doing too little or too much, because he's not doing what he said he was doing. So the main critique in relation to BlackRock is the inconsistency of their action with the ESG strategy. In the case of BP, you know, it's a totally different story. We share the position of BP in terms of, you know, the long-term direction of this journey, but we think it's irrational and insane, you know, to not to adjust and not to be flexible when the situation changes. Clearly, we learn what does it means relying on energy stability. You know, you've seen the war in Ukraine. We see the situation in the Middle East. So BP has to adjust its strategy. That's really what we're asking.
All right, Giuseppe, thank you so much for your time today. That was the Chief Investment Officer and Partner at Bluebell Capital Partners, Giuseppe Bivona. Now, let's just remind you of BP's response. It maintains its strategy is still to move into clean energy, but it will continue, they say, to invest in oil and gas. We'll have plenty more in our top news today. This is Bloomberg.
think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday?
You can't waste any more time.
It's an all-hands-on-deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
So this would be a carbon-neutral jet fuel.
A little worm that can actually dissolve plastic.
Creating clouds, this is the definition of thinking outside the box.
I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
We are looking for improvement in the second half on our top line versus what we delivered in the first half, and we're looking at gradual improvement, and that's off the back of gradual improvement in North America. We also announced that we look to reduce the inventory levels in Latin America back to an appropriate level for the consumer environment there, and we're still looking at growth across our other regions. As a reminder, we had good growth in Europe and Asia Pac and Africa.
That was the Diageo Chief Executive Deborah Crew there. Now, the company is one of the biggest fallers on the Euro stocks after disappointing sales and earnings in the 6 months to December. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Now, the Italian and Spanish economies both expanded more than expected, France escaping a recession, but Germany remained the weak spot as the Eurozone tries to actually avoid a downturn. Now, Saudi Aramco abandons a plan to boost its oil output capacity in a huge reversal that will, of course, raise questions about the kingdom's view on future oil demand. And Elon Musk says the first human patient has received a brain implant from his startup Neuralink, which aims to one day let humans control computers with their minds. And welcome to The Pulse. I'm Francine Lacqua here in London. Now, Italy's gas network operator, Snam, says it will increase investment in the country's energy infrastructure to more than 11 billion euros by 2027. Now, that includes the transport, storage, and distribution of liquefied natural gas, which has been, of course, a key part of Europe's move away from Russian pipeline gas following the invasion of Ukraine. While Snam is also grappling with geopolitical tension in the Middle East, the company has said it does not think the Red Sea shipping turmoil will have a significant impact for Europe in the short term. Well, Snam Chief Executive Stefano Venier joins us now for an exclusive conversation. Thank you for joining us. I mean, it's great to have you in the program because we talk a lot about energy security, energy supply, and some of the concerns that we have over the Red Sea. Are you confident that actually things will quieten down?
I think so, and I mean, at least in the short term, because I mean, we have one security that is guaranteed by the level of the storages we have in Italy and all across Europe. We have more than 70% fulfillment in the storages that do represent, let's say, a large amount of potential supply for the market, and we are in the middle of the winter yet, and therefore we have still 2 months left, and therefore I think we are pretty confident that the situation in the Middle East will not impact in the short term, of course, in a direct mean. In the midterm, could be slightly different, of course.
And so what's your biggest concern going forward? I know there's also, the Prime Minister of Italy, Giorgia Meloni, trying to find agreements with African countries to get, to make sure that there's energy security, certainly in Italy and the rest of Europe. Are you confident that things will get easier from here?
I think the first target we should have is to recreate flexibility in the energy system all across Europe. I mean, to tackle with the shortfall in the Russian supplies, we had to use all the spare capacity we have on the LNG, on the pipeline transportation, using the supplies, the additional supplies from Norway and Algeria. So now we have to find a new settlement going forward that further expand the options for sourcing the gas all across the world, and LNG is the solution, increasing the LNG capacity. Of course, Middle East could be in the middle term a good opportunity thanks to the developments offshore Israel, but of course the situation can influence the timing in the development of those, in the taking of those decisions. And on the other side, of course, the initiatives that has been put in place is in the short term to secure additional supplies of gas, but in the midterm also to support a transition, because I think at the end of the day, more and more, security and transitions are two sides of the same coin.
And you mentioned the medium term, and we were studying with the newsroom some of your facilities, some of the floating facilities, some of the floating storages also have in Piombino. Like, what are some of the medium-term concerns that you have, and is there anything that you can do to protect basically that passage?
I think what we are doing is exactly to expand in this LNG capacity. We will have an additional, let's say, floating vessel coming on stream in 2025 that will expand for additional 5 BCM the capacity of the country. And so we have now 5 possible, let's say, corridors for sourcing the gas via pipe, and 5 LNG facilities in the country. And therefore, it's giving some, let's say, comfortable in terms of, let's say, options we can play with. And the third is the construction of a new backbone from south to north that has a strategic role not only for Italy but also for Europe, because we have As a matter of fact, as Italy, as Snam, we have an export capacity that is more than 16 BCM of gas per year, and that can be supplied or can be go through Austria and Switzerland to the central part of Europe.
And this is kind of like the backpin of what you've laid out also to investors last week. How quickly can you become a significant exporter to Central Europe?
Yeah, we have been exporters last year for 4 BCM, 3 BCM, 2022, 3 BCM in 2023. And we have already available this capacity. The 6.5 BCM through Austria has been already booked by the shippers. Of course, they use it opportunistically to that extent. But the capacity is already there. And with the completion of the Adriatic backbone, we will increase that capacity up to 10 BCM through Austria.
In what time frame?
Yeah, by 2027, yes.
And so what are the main challenges there? Again, it's probably not funding. Is it, I mean, what are still the steps that you worry about from now to getting to that place?
I think we have done the most in the sense that we have got also the support from the European Union through the REPowerEU funds that will cover part of the investment, at least roughly 20%. And the rest will be, of course, funded by the company. And we have a tight time schedule. We will open the works next April, May. And from then we have 3 years to deploy the 400 kilometers backbone, the new backbone.
Can you talk to me about hydrogen? So this is one of the other things we're trying to figure out. Is exactly some of, I guess, the challenges to export some of the hydrogen from Algeria, North Africa, back home.
Yeah, that is part of the so-called South H2 corridor. That is one of the 5 corridors that the European Union has identified as a core corridors to, let's say, import, since 50% of the hydrogen that will cover the demand in Europe by 2030 has to come from import, and 40% can come from the North Africa and through the South H2 corridor. South H2 corridor connects Algeria and Tunisia to the Bavaria, let's say. And as Snam, we have, of course, the piece in Italy. We have a controlling stake in Tunisia and controlling stake also in Austria. So we have a sort of, let's say, we are playing a role to coordinate. Of course, demand and production of hydrogen has to come because we, as infrastructure player, we can put the pipes. And the great advantage we have on this South H2 corridor is the fact that with the completion of the Adriatic backbone, we will have 3 pipes going from North Africa to, let's say, Bavaria. And that will leave us the flexibility to use one of these 3 pipes to ship the hydrogen, let's say, in parallel with the gas molecules, managing the switch off.
Carbon capture storage. Talk to me about that.
Great.
Is the EU is the EU ambitious enough and can actually Italy play a real role for also the rest of Europe?
Again, we are trying to take advantage from some features that we have as Italy. In the hydrogen, we are a sort of bridge. In the carbon capture, we are developing a project with ENI to store the CO2 in depleted gas field in the shallow water, just 7 miles from the coast. That makes it very convenient, very cheap in interconnecting, and also this gas fields that has plenty of capacity, up to 500 million tons, are just in front of the Pianura Padana. That is the part of Italy where you have the high concentration of hard-to-abate industries, and Ravenna can receive also via shipping the CO2. So it's an ideal situation. We will start testing this summer with a pilot phase.
Talk to me about asset sales. Is there anything that you want to actually get rid of to use the money for elsewhere?
What we are doing right now is to, let's say, test the market for a stake in the interconnection between UK and Belgium, where we have slightly more than 20%. That is the first part of the business the portfolio we are looking at. So in the next future, of course, but we don't need to do that in the sense that the balance sheet has the flexibility. We have 2 billion euros flexibilities, also in spite of the 11.5 billion euros of investment we will carry out by 2027. So we have plenty of flexibility. It's just an opportunity we can take to optimize the portfolio let's say, consistently with what we said to the market. We have 3 clusters of stakes.
Yeah.
Some are very strategic, and some others are more opportunistic.
So where do you put, for example, De Noor, a hydrogen specialist? Is it something that you would, that you'd be looking to sell off completely?
Not for the time being. Not for them being. Last year we sold 5% to increase the liquidity of the stock and to let the value of the company to come up. But of course we have certain synergies. We are developing with them the first gigafactory for, let's say, electrolyte components, and of course they are consistent with these first steps of development of the hydrogen production, because we all have to make, those first projects to be on stream, to test it, and to see how they work, and to that extent, they are very complementary in terms of technological know-how, and with us, with some pilot projects.
But you could sell a bigger stake. Is it something that you'd be looking at, potentially, or just...
it's something that we might look in the future when we will see the right price, of course, in the long run.
Very interesting. Thank you so much. Of course, Stefano Vignier there, the SNAM Chief Executive Officer. Now, coming up, Novozymes becomes Novonesis after the biggest merger in Danish history, and we'll be speaking to the President and Chief Executive of the new biotech company. That's coming up next, and this is Bloomberg.
Warren Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. One of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Welcome back, everyone. The biggest merger in Danish history has just been completed, with the biotech companies Novozymes and Christian Hansen combining to form Novonesis. Now, the new company has one of the world's biggest libraries of commercial enzymes and microbiomes, which are being used, for example, to tackle food intolerances and improve shelf life. Well, joining us now from Copenhagen is Esther Bijget, the President and Chief Executive of Novonesis. Thank you so much for joining us, Ms. Bijget, and congratulations, actually, on also this massive deal. What's your biggest hope for the company going forward? I know there's a number of things that you're working on, including fermentation, precision fermentation, I guess plant-based as veganism picks up. Where do you see yourself in 2 years?
Beautiful, Francine, and thank you for this fantastic introduction. You described it perfectly. The amazing company that we have created, by combining 2 extraordinary companies that together they are even better, even stronger, even better equipped to provide the answers of the future, to provide value-added solutions for our customer. And to your question, what is the biggest hope? I would say it's not a hope, You're going to see it's a reality. We're going to make this happen. And we're going to continue to be enabler of answers for a healthier planet and a healthier life. Today, the aggregated sales of Novo Nordisk, more or less 50-50. 50% of our sales, they already contribute to healthier lives, to sustainable agricultural, to healthier nutrients, to value-added ingredients in nutrition to give that flavor and a customer experience, consumer experience without compromising health. And 50% of our sales, they enable a healthier planet, lower chemicals use, lower CO2 emissions, biofuels that lead to up to 60% lower CO2 emissions. And we're going to continue to be boldly, firmly investing in both. We are a biotech company. We master the art of science, of bringing solutions inspired by nature at scale. And that's the value that we bring. Go ahead, sorry.
When you look, for example, at precision fermentation, which is basically, I think, a very similar process to insulin making, but you make protein instead of feeding microbes, bribes in a tanks. Again, how big do you think this market will be internationally? Like, how much will that grow?
Enzymes are precision fermentation. Proteins, enzymes is just one type of proteins. So the capabilities that we put with this company, it is the bioengineering and the high scale and the capability to bring solutions at scale. So not only design, but bring them at scale reliably and technically, coupled with also the deep understanding of the microbiome from a strong presence on dairy and health that Christian Hansen has. We see a need in the market for doubling protein need demand that cannot be fulfilled from only the heritage solutions of the past. And here we're going to be actively present through the enzymes that lead to the extraction of the protein, through the microbes that make to the fermentation of the dairy ingredients, but also with high-value proteins that they bring that texture, that flavor, that just experience, and also in nature and in respect with health. That's going to be a component of our growth. Actually, we just started a plant in Blair last year, and we see already the first sales of our solution moving and having an impact as an active ingredient on plant-based meat. So many more to come, and that's one of the key areas that Novo Nordisk is going to show its unleashed potential.
I was going to ask you, actually, when you look at certainly European taste, cutting back on meat, how will you tap into that? Is it veganism, plant-based, solutions for meat, or is it something else? I don't know how our taste buds and also what we use and consume will evolve.
The way that we see it, it is more than we see it as an alternative to meat. The consumer need in a growing population, it's a 50% increase of protein demand. So it's not one or the other. It's simply offering a toolbox of offers and alternatives to the consumers. It's going to be meat in the future. And we, by the way, Novo Nordisk is present in that by enabling and bringing solutions to lead to healthier chickens, healthier swines, and also with a higher yield on nutrition. But it's also going to be a continuous increased pool for other alternatives to fulfill that protein demand. And plant-based meat is going to be a growing one and a stronger component of that in the future. And we are going to be an enabler of making that happen.
Esther, last year was definitely the year for weight loss drugs. And we've seen that a massive space. Again, when you look at the dietary shifts, what surprised you the most in the last 12 to 24 months that gives us a good picture of where we'll be in the future?
Surprise is a big word. I wouldn't call it surprise. I think maybe the realization and the fact and the visual proof that the power of biotechnology, it's immense, and we're only starting to unleash it. And then that one change or one leap, it brings into another. Yes, there is amazing solutions for weight loss, but that also brings opportunities for solutions with higher protein content. There is a need for changing the nutritional habits. So the disruption that the novelties created by science brings endless opportunities for also biosolutions across many other steps of the value chain.
Yeah, which is extremely interesting. And so for the ones really that are trying to figure out, what do you see as the biggest market potential in terms of these changes?
We see from one side the consumer's awareness and conscious of health. It's continuously to be there, and the need of opportunity of changing nutritional habits, and then that it need to be, the taste and flavor should not be compromised. But then there is a need of boosting and active ingredients that can be probiotics, that can be also high-value proteins, that they fulfill the nutritional needs from the consumers, that they keep evolving. And biosolutions are present in all of them. And I think I mentioned that before, right? It's either on how you extract the proteins or how you grieve the functionalization, the texture, or how you add value added, but without chemicals, and in solutions that they are clean label and they good to give both texture experience and health.
I know one of the things we've been trying to track is some of the vegan but also veggie innovations that were very strong in 2022, maybe 2023, saw a little bit of a pullback. So are you going to see a lot of volatility again in how our tastes, for example, for fake meat actually ends up? Are you seeing volatility, or how do you track that?
I would rather focus on the latter. It's volatility. So the need is there of growing demand, and then the suite of options that the consumers will have will continue to grow. But then that's not a linear path. We see our customers slowly and firmly demanding, but not everybody also has been growing in the same trajectory. So that's the disruption, or that's the volatility that we're seeing. And the underlying momentum continues to be solid growth. It's only not linear. No disruption in the market is ever linear. And what is important is to look at the long term. Also, what is important is to pause and look on where we are versus what we're coming, and see that the value that we bring into our customers, it has a strong pull. So we believe that the plant-based proteins and alternative meat solutions will be a stronger enabler of the future, coupled with many other solutions to fulfill the consumer needs.
It's so interesting. Thank you so much, Esther Baijet, there, the President and Chief Executive Officer of this newly created Novonesis. I'm sure we'll see a lot more of you, Esther, so thank you so much for joining us today. Coming up, Elon Musk says the first human patient has received a brain implant from his startup Neuralink. While the company aims to one day let humans control computers with their minds, that story is up next, and this is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and any given day it would be the head of a studio, and just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it, because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back, everyone. Now, Elon Musk says the first human patient has received a brain implant from his startup Neuralink. It's a significant step forward for the company that aims to one day let humans control computers with their minds. Well, joining us now is Matt Bloxham from Bloomberg Intelligence. Matt, honestly, my mind is blown. I know this was coming, but actually when you read it first thing in the morning or you see it on X, you kind of think, wow, it's really happening. So, I mean, is this good or bad?
Well, I mean, I think hopefully it's a good development, and obviously Elon Musk has always said he wants to develop these kind of technologies in a kind of safe and responsible way for humankind. So hopefully he's going to be true to that. I mean, also it's very early stage, and there's a huge amount of trials and an evaluation to kind of to take place before we're kind of anywhere for this kind of being a mainstream development. But yeah, the kind of, I guess the thing that's exciting for me is kind of obviously it's helpful for people from a health perspective,
yes.
but the potential to extend these kind of technologies into mainstream kind of consumer electronics, the evolution of the smartphone is something we talk about all the time, and whether these kind of technologies can be adapted to kind of evolve, that kind of technology would be quite something.
But can it? And I'm kind of with you, right? It's immensely exciting and a massive opportunity for people that need to communicate that haven't been able so far. Mm-hmm. I guess who regulates it if then becomes, a consumer good like you buy
exactly,
your iPhone?
Yeah. I mean, it's kind of because it blurs both the health side and the technology side. Yeah, there could be lots of different agencies involved in how this stuff evolves. I think it's an incredibly complex field. Mm-hmm. It's going to take quite some years, I think, before we kind of see this, beyond kind of these kind of hopefully positive trials.
Matt, I want to talk to you about this for years and hours, but we do have earnings, the fabulous 7.
Yes, yeah, and obviously first up we've got Microsoft and Alphabet later today, and I think people are relatively optimistic about both those. I mean, I think that all these big companies have struggled with revenue growth the last few quarters. The last quarter was a re-acceleration. I think most people expect another acceleration again this quarter, so Microsoft 16% growth, Google around 12%. Different trends going on there. I think for Microsoft, obviously the main focus is around the Azure cloud business, maybe kind of 28% organic growth. There's been this talk about kind of enterprise customers optimizing their spend, and some suggestions that maybe that optimization process has kind of run its course, and they're opening up the budgets again. For Google, it's really about the strength of their search business and advertising revenue. Is that picking up again?
Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence. We'll have plenty more throughout the day. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg.
Good morning from my world headquarters in New York. I'm Manus Cranny. Danny Berger is out for the week. It is Bloomberg Brief. Let's set the agenda. Ahead of the Fed decision, the Treasury makes a surprise cut to its borrowing estimate, easing worries about a flood of debt. It's been a marathon day for GDP numbers in the euro area and just moments away from a reading for the whole of the 20-nation bloc. And Microsoft and Alphabet kick off the earnings from the US tech megacaps, while Elon Musk's brain implant startup announces a major breakthrough. Stagnation in the euro area for the fourth quarter. That is the red headline. Euro area GDP stagnates as it declines by 0.1%. So this is the very first reading there in terms of the fourth quarter stagnation. Let's get straight to Oliver Crook. We've had a flood of these. It's been a marathon. It's been a marathon day. We'll get to Oliver in just a moment. It's been a marathon day in terms of the data. We'll break those down. You've had Germany, you've had France. There's the euro dollar at the moment, 108.27. On the back foot for the month. We'll run through that in a moment. Higher equities faring, as I said to you, it's going to be a monster day for this start of the tech earnings season. Stocks are a little bit lighter on their feet. The 800 gorilla in the pound is in the room is the tech earnings. Kalanovic at JP Morgan says the tech earnings are testing rich valuations. This Mag 7's trading at a 34% premium to the overall index, and it is that differential between the index, the weighted index, and indeed the equal index. You will wait for two stocks tonight, Microsoft and Alphabet reporting. Tesla is an alternative that you can look at if you want to look at the implant story from Elon Musk and his new company. In terms of Europe, Diageo is on the downside as the drinks business hits a tough time in Latin America. It's having a tougher time than was estimated. Roll it over and have a look at the very initial response to the bond auction. There's the Diageo price tag for you, down 3%. In terms of the bond market, 405, you had that really good news from the Treasury, cutting its quarterly borrowing estimate to 760 billion. October, originally that was 816. So you had a double bid for bonds and for equities on the back of that. The dollar index slips ever so slightly. We'll talk to Dominic Bunning in a moment in his view on that. And the euro is really trying to grapple with a stronger inflation narrative from Spain, but yet stagnation on the growth front. Let's cross over to Oliver Crook. He's standing by in Berlin. We very nearly came to you very early, Oliver, there, but I know you were poised and ready. Poised like a panther.
Always ready.
Always ready. So here we go. Am I more concerned about the tailwind of inflation in Spain than I am stagnation in growth? The conundrum. Good morning.
I think you're concerned about both. And actually, you know what? The tailwind of inflation also exists here in Germany, where, yeah, you have very poor growth. We had the German number out today, down 0.3%. That is the great weakness out of all the major developed markets here in Europe. And really, Italy did better. Spain did a lot better. France, okay, stagnation. But really, the concern is here in Germany. And what that looks like going forward is not a whole lot better. I mean, we had the Bundesbank saying that we thought we hit the bottom for Germany back in December, but no, we're not convinced yet. So that sort of rebound in Germany is getting delayed. And there is a political consequence to that economic story, Manus, and that is going to feed back. Last night, Deutsche Bank, the CEO, Christian Sewing, talking in front of the banking committee saying that there is a real threat of the far right gaining ground in Germany, that will threaten investment here in Germany. So you're going to see that economic story become a political story and then become an economic story again.
Interesting how you get the CEO wading into that. Got to say, rocking the new look, Oliver. We're moving forward in Berlin there with
appreciate it, Manus.
with roll necks and tweed jackets. Yeah, there you go. This is a whole new look for Bloomberg reporting. Style over substance. Oliver, thank you very much. It's 2 for 1 with Oliver, of course, style and substance. Let's bring in my guest. He's got plenty of style, plenty of substance, and he's got a call on this market. He is the head of European FX research at HSBC, Dominic Bunning. Dominic, again, Oliver says I should care about both. The respike in inflation in Spain, but this is stagnation in the Eurozone. So the ECB, I mean, up until this data, they perhaps had the cover to wait. Given the stagnation, do you think the pressure will be mounting on them to go earlier? Good morning.
Yeah, morning, Manus. Look, I think both things do matter, but there's almost a time issue here. So in the near term, over the next few meetings, the ECB is really laser focused on those inflation numbers. And they do, I think, need to see inflation come down a bit faster, maybe before they start to act. But if you take a longer term look at things, an environment where you're just stagnating and generating higher rates of inflation for any given level of growth, or lower rates of growth for any given rate of inflation, is not a good environment for your currency. And that is one of the reasons why we've had the view that the euro would weaken this year. You know, started the year, many people probably thinking that I needed a chip in my brain that Elon Musk now announcing, because we were talking about euro heading lower this year. But, you know, I think what we're seeing is this economic backdrop in Europe over the medium to longer term is just not justifying a stronger currency.
Which then takes us to, you know, who will cut more and earlier, and perhaps that drives the euro-dollar trade in of itself. Given the thesis that you have, and you're calling this lower euro, given the data, do you see the ECB going before the Fed and in a quantum larger than the Fed this year?
Yeah, I mean, I think that the timing of the first cut is going to be fairly close. You know, our base case is maybe the ECB does still wait until June, but I think what you're going to start to see is the market pricing maybe a deeper cutting cycle for the ECB over the course of the next sort of year or so. The Fed, the data is just still so resilient. The labor market is still pretty strong. You know, inflation it's coming down on some levels, but it's stickier on some other measures. And one of the key things we've looked at over the last few years, look at the domestic consumer story in Europe versus the US. The US is back on pre-pandemic trends. It has been ever since late 2021. The US domestic economy is still very, very strong. Europe is barely back to pre-pandemic levels of domestic household consumption. And that, to me, suggests that Europe is going to struggle to have higher rates for longer in comparison to the US. So, you know, who goes first, we'll see. But I think if we're looking towards the end of this year, you know, taking a view of the whole of 2024, the bigger challenge is much more in Europe, and ultimately they may need to cut rates further over the course of the cycle.
So then trading that spread, which is higher for longer, perhaps US relative to Europe, where is the near term on the downside on euro dollar?
I mean, I think down towards 107.50, 107.30 is kind of an obvious starting point, and that's where we were before we had some sort of dovish November CPI data in the US. But I think over the course of the year, no, we do see euro dollar down towards 105 and possibly could even go below that if the US continues to hold up just as much and if the ECB does start to lean towards that more dovish outlook. So I think in the short term, down through 108, we get down towards 107.30, 107.50, that kind of area. But over the medium term, yeah, 105 is certainly in play.
How desperate are we to take risk or to find good news? You look at the Treasury yesterday cutting the quarterly borrowing estimate to $760 billion. Now that is less, but it emboldened risk and it infused risk, didn't it, across the asset classes. I mean, but it is clutching at straws when you look at the fiscal trajectory of the United States of America, isn't it? But it was a boost nonetheless to risk.
Yeah, and I think that's what you're seeing a lot at the moment. You're seeing a lot of short-term sentiment boost, but actually when you look at the overall trajectory, and I think for the overall risk environment, it is getting harder and harder to justify some of these valuations. We need to see constantly good or even better than expected news, and we're only really edging higher in terms of that risk environment. And when we look at that from a multi-asset perspective, we think the market is somewhat complacent. Some of those signals that we get from things like volatility indices, etc., they're suggesting that maybe there's a bit too much exuberance. So we think the risk environment can drop back. But I think for FX, what's even more interesting is that the risk sort of group of currencies are no longer seeming to benefit in the same way from that positive risk sentiment they did even a few months ago. The back end of 2023, the dollar was under pressure. Risk FX was doing very well alongside higher equities. That relationship seems to be shifting a little bit, and we maybe are going back towards that rates-driven view. And in that rates-driven world, then the dollar starts to become a much more of a happier proposition, I think.
Oh, Dom, you're flip-flopping on me now from row to rates now, But that's what you call, when the data and when the landscape changes, you've got to change direction on that as well. Let's just quickly square off with the Bank of England, because what you say here is the ECB is unlikely to be alone in dancing to this dovish tune. So how dovish will the Bank of England be? And will that be injurious to the pound? Or will it put a floor under it? Because rate cuts are not necessarily, I suppose it depends whether we look at risk or rate. So you tell me whether a dovish pivot would be a blow to the pound.
Yeah, we think it will be. We think the cyclical type of currency behavior is coming back. I think you've seen that on both sort of sides of the agenda recently. We had a hawkish Norway central bank back in December. That really boosted the currency. We've had a bit more signs of dovishness from the ECB, and that weighed on the currency. So I think we are going back towards that more rates-driven cyclical world. And I think the Bank of England, this could be a really interesting meeting. You're going to get some big revisions lower in terms of the inflation forecast for this year. You could well see a vote for a cut from one of the members of the MPC. And that comes, remember, after December when we had 3 votes for a hike. So that's quite a big shift over the space of one meeting, basically. So I think we could start to see much more of a dovish pivot. And I do think that would weigh on sterling. But actually, in a short-term sense, if you want to get away from the risk appetite story, then you trade euro sterling higher in the short term. So look for that dovish pivot from the Bank of England to actually undermine sterling against the euro in the short term. Longer term, sterling and euro both lower against the dollar, but just around this meeting, I think euro sterling going up a little bit could be the way to play a dovish Bank of England.
Okay, we got the message loud and clear on the euro sterling and your euro dollar call. Dom, thank you very much. Dominic Bunning, changing as the landscape changes at HSBC. Other stories trending on your Bloomberg terminal this Tuesday morning. Iran is urging the US to use diplomacy to ease the tensions in the Middle East. The country is bracing for a military response to a deadly attack on the American base over the weekend, killing 3 US soldiers. The Biden administration is seeking a response to the attack that's tough enough to deter Iran and its proxies without sparking direct warfare with the Islamic Republic. Saudi Aramco abandons its plan to boost its oil output capacity to 13 million barrels a day and to maintain it at 12 instead. It's a surprise move, and it will raise questions about the kingdom's view on future demand for oil. Norway's $1.6 trillion sovereign wealth fund failed to meet its benchmark. This is for the first time in 5 years. The fund saw losses in unlisted real estate, even as the stock markets rebounded. Later this morning, the Norwegian Sovereign Wealth Fund will join the Bloomberg surveillance team to run through the numbers and the issues. 7:15 a.m. Eastern Time. Don't miss that conversation. Coming up, we go live to Florence, Italy, where it's host to the annual meeting to address the evolving world energy questions. This is Bloomberg.
I think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday? You can't waste any more time.
It's our all-hands-on-deck moment.
Around the world, people are working for a better tomorrow. What we're doing is mind-blowing.
So this would be a carbon-neutral jet fuel.
A little worm that can actually dissolve plastic. Creating clouds, this is the definition of thinking outside the box. I believe when history is written, and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist guide to the planet.
Jamie Lannister on the runway.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
This is Bloomberg Brief. I'm Manus Cranny in New York. Governments and business leaders are meeting at the annual Baker Hughes conference in Florence to discuss energy security, and sustainability. Bloomberg's Alex Steele spoke to EQT President Toby Rice a little bit earlier, and here's what he had to say about President Biden's LNG pause.
This is a step backwards towards our climate ambitions. When you look at what the world is discussing and what actions need to be taking place, we just got through COP28, and there was a stock take that took place, and that sort of sets the climate action for the future. So how does this action align with that? It doesn't. Number one, in that stock take said that transition fuels are going to be necessary, critical to meet our climate goals. That's a fancy word. Transition fuels is a fancy word for LNG. The second point that I think is incredibly important to notice is that the focus should still be on accelerating the unabated use of foreign coal. And so what does LNG do? It replaces the biggest source of emissions on this planet, which is foreign coal. Limiting LNG expands coal. Limiting LNG increases emissions, not decrease.
Have you talked to people in the U.S. government yet?
We have had some conversations through one of our organizations' page, the Partnership to Address Global Emissions. We put out a statement before this announcement was made. There is a lot of, and there's going to be some more communication after, when we get back to the States, we'll be having these conversations. This is from a environmental perspective, we think this is bad policy. From an energy security perspective, we think this is bad policy. From a relationship with our allies, we think this is bad policy. Unfortunately, it's a little bit of a political stunt, but we think ultimately sets the world backwards towards meeting our climate goals and providing energy security to the world.
Okay, so that's the broader scope. On an EQT level, I mean, you have a binding agreement, right, with Energy Transfer that directly feeds into the Commonwealth LNG project. There's the Lake Charles project. There's also the Commonwealth LNG project. Like, this directly impacts where you're going to be sending some of your gas. Would you feel the impact? When?
Well, these projects were going to be coming online in 2027, 2028. These are the type of projects that now, with this uncertainty, have been shifting to to the left, and that just means our ability to replace foreign coal has been shifted to the left and been.
Where's your gas
delayed. Our gas right now, about 25% of our gas moves down to the Gulf Coast. So today, it is feeding into LNG facilities. Starting with these projects, EQT will enter the international market directly. But this is a signal to the world that we hope the United States will come up and reinforce the world is that we are a country that is driven by market forces, not political forces.
EQT President Toby Rice speaking with Alex Steele a little bit earlier at the annual Baker Hughes conference in Florence. Alex, good to see you, and a great gathering at a pretty interesting time. Toby Rice talking about this moratorium. How is this building in the hallways there of Florence? Are people seeing it as a completely political differentiator to Trump, or as some kind of an energy own goal that the U.S. has just scored?
So most definitely it's seen as a political move pretty much across the board, but that doesn't mean that people aren't actually worried about the consequences. Now, the CEOs officially are going to say it's going to be fine, we need the LNG. You heard Toby Rice making a strong message there. But off the record, the conversation is, look, if the U.S. can't be reliable, why won't Japan just go to a different country? Why sign a long-term contract with the U.S. when you can get it elsewhere with more stability? So there's that problem. The other is sort of the CapEx plans, right? Now, Citigroup has been pretty critical of this policy in relation to what it does to oil service companies like Baker Hughes, saying that it puts at risk $1.5 to $2 billion worth of orders for Baker in particular if the moratorium is on there for the entire year. So they may talk like it's okay and that it's going to be all right, but there's some material money here that is at stake.
Now, look, there is an expectation building that the U.S. is going to retaliate against Iran. We don't know what that's going to be, whether it's going to be well, it's very unlikely. It's assumed it's unlikely it's going to be a direct hit on Iran. It's going to be somewhere into its assets elsewhere. What are people saying there at the moment? Are they nervous? The people I speak to in the Middle East certainly are. So what are they saying in Florence? They're probably having a nicer dinner, but a different time.
Nobody is talking about it, which I find to be very interesting. It's almost like no one wants to talk about it because they don't want to believe that something really bad could happen, so therefore they're just not going to really discuss it. Amrita Sen talked to me about it earlier from Energy Aspects, and she was kind of echoing the same sentiment, that the unthinkable is so unthinkable we're not going to think it. Now, I think what would be interesting is if it was the sanctions were implemented, say, more strictly to Iran. Like that could reshuffle some of the supply in the oil market. On the flip side, though, that there's the demand picture. And Amrita was pointing out to me that, okay, if you had some kind of real retaliation and big shock, yes, that could spike the oil price, but that would also have severe global implications and global economic implications. We're already looking at, you know, Eurozone GDP completely stagnating. So what does that do on the demand side to offset the geopolitical risk rise?
Just looking at the stock price of Baker Hughes, obviously your great and glorious host there, Lorenzo, say hello to him, but he's under pressure. I mean, he's got a stock price which is not performing that well, is it, from the middle of last summer? I mean, have you chatted to him? What's the message there?
Yeah, so it's a couple things. I mean, the big two hits to earnings that came last week. One is that their outlook for oil services, so that part of the business, was a little below what their peers like SLB and Halliburton put out there. He's saying he's just being conservative, that, you know, he's looking at the whole picture and he doesn't want to overdo it. That's one part. The other part really winds up having to do with the dividend. So other companies increased their dividend, they did not. Sometimes the street doesn't love that.
Okay, well, listen, enjoy. I have got envy. Florence is certainly a beautiful city. I hope you get a little bit of time away from. Apparently, it's one of the more enjoyable gigs. I have it on good authority. It's one of the more enjoyable gigs to go to. Alex, thank you very much. Good to see you. See you back at base very soon. Alex Steele at the Baker Hughes conference in Florence. This is Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg Brief. I'm Manus Crenny in New York. Bond markets are a central focus for us over this 24 hours. You just had stagnation in the Eurozone. That puts more pressure on the ECB to perhaps act a little bit earlier than people had been anticipating. Yields rise ever so slightly. German yields 2.24 at the moment. Keep an eye on treasuries. Obviously, you had that good news yesterday on the quarterly refunding being cut. We dropped by 7 basis points on the 10-year paper. We continue that through this morning. We're going into a Fed meeting, so yields are continuing to drop. You have got the tail risk of Spanish inflation, and to a certain extent, that's where you're just seeing perhaps a little bit of a pip higher on the 10-year government bonds. We just had Dominic Bunning from HSBC expecting quite a dovish UK Bank of England on Thursday. Yields tick just ever so slightly lower at 387 on the UK. Coming up, we're going to dig deeper into these tech earnings. How are you prepared for the volatility? What do you need to do? Amy Wu Silverman of RBC Capital Markets joins me with her calls on big tech and risk.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back. It's Bloomberg Brief with me, Manus Cranny in New York. Danny Berger is out for the week. Here's what you need to know. Ahead of the Fed decision, Treasury makes a surprise cut to its borrowing estimate, easing the worries about a flood of debt. The Eurozone unexpectedly avoided its first recession since the pandemic in the latter half of 2023. Firmer growth in Italy and Spain offset the malaise of Germany. And Microsoft Alphabet kick off the earnings tonight. It is the day of the mega techs, with Elon Musk's brain implant startup announcing a major breakthrough. And that is quite a staggering event in the world of science. What's happening? Equities have just dipped ever so slightly into the red. Kalanovic warns that the valuations on the Mag 7 are 34% above the index, so it's a clarion call of warning from him about rich tech valuations. NASDAQ barely into the green at the moment. Of course, BlackRock have upgraded their view on U.S. equities, predicated on the view that AI will be a much bigger driver, and that's going to come through tonight in terms of Microsoft. How much are you willing to pay in a business to put AI onto that? Microsoft will come after the bell. There it is. It's up 0.8%. Alphabet will also come after the bell. Stock 600. Now, if you enjoy a tipple from Diageo, a little bit of tequila, that isn't going according to plan, certainly not in South America. But when you strip out South America, Diageo sales numbers are up about 2.5%. Diageo's down 3.45%. So it's booze. The booze cruise is not doing that well there. Treasuries dip. We dropped by 7 basis points yesterday. I just said it to you before. The quarterly refunding got cut. That was a nice surprise for risk overall. The quarterly refunding being cut to 760 billion. Originally, it had been penciled in at 816. So that gave a lovely boost to risk. You saw yields drop by 7 basis points on the longer end. Bunds this morning are reacting more so to the stagnation nation in Europe. The dollar is flat. We've just had HSBC Dominic Bunning talking about the differential between who's going to have to remain higher for longer, and that's probably the U.S. relative to the United States of America. In the very near term, you've got Francois Villeroy de Gallo talking about any meeting is live. It's down 2% on the month, and it's probably going to go lower to 107, 107.50, according to Dominic, in the very near term. Now, I mentioned it at the start, the inspiration for a visual, which is how we think and how we control machines. It's the tech startup, it's Neuralink. It took a huge step forward when its founder, Elon Musk, posted this on X. The first human received an implant from Neuralink yesterday and is recovering well. The initial results show promising neuron spike detection. Of course, this is about the future. This is about health in the first instance for those people that need it most. How to control a machine from the mind. Matt Bloxham is with me from Bloomberg Intelligence. It really is something from science fiction that we would have seen 20, 30 years ago on a Star Trek-like program. But this is now technology reality. Good morning, Matt. What does it mean?
Yeah, I mean, it could mean lots of things. I guess we shouldn't get too carried away just yet because this is the first human implant for Neuralink, and if all goes well, then they'll do another 10 or 11 this year. But, I think for people that, aren't able to kind of control computers with their hands, then, this definitely could be a really big step forward for people to kind of interact with technology and communicate with the wider world. But I think it does also have potential mid to long-term implications for everyday consumer electronics like smartphones. The smartphone market seems pretty stale now. It's not going to be replaced overnight, but integrating the human body and brain with technology is potentially quite an exciting mid to long-term evolution of the devices we use and interact with every day. So yeah, some kind of really exciting steps forward here. I guess we'll have to kind of wait to hear more about how well this chip is interacting with this first patient's brain and whether they're really getting those signals and then able to translate that onto controlling devices.
So it's going to come down to this Alphabet, Microsoft. How much are we prepared to pay for the beginnings of AI in our business? Now, we know Alphabet and Google perhaps are a little bit further behind some of the other AI deliverers out there. So it's going to be about advertising for them. Just run me through the top thoughts.
Yeah, that's right. So AI definitely a big theme for both Alphabet and Microsoft tonight. But as you said, for Google, it's about how AI is affecting their core search business and whether things like ChatGPT have taken search advertising away from them. I think most people are thinking, no, not yet. And actually, that Google's done a good job in kind of adapting to that change. Their cloud business, Google's cloud business, also been behind. I think people are expecting a rebound in profitability at that unit. I think it needs to grow revenue and profit quickly, and it's been lagging. So I think people are looking for a positive update there. On Microsoft, it's really again about their Azure cloud business. I think people are still expecting between 25 and 30% organic sales growth for that business. It's big already, so that would kind of be a really kind of encouraging sign for them. And how they're actually getting traction with that suite of Office co-pilots, which are AI-powered assistants within the Office 365 platform. So I think relatively small amount of revenue near term for that, but clearly the AI opportunity is really central to Microsoft's mid to long-term growth. And so that's what's underpinning that earnings premium we're seeing for these tech stocks relative to the wider market.
Of course, that doesn't come without the execution risk in terms of OpenAI, does it? Suddenly the basket looks just brimming with one big apple. Of course, it's more than that. Matt, thank you very much for setting the stage. Matt Bloxham there from Bloomberg Intelligence. Let's stick with the tech theme. So this is what Kalanovic at JP Morgan had to say. Never a man without an opinion. This is a crucial week. This week will be crucial in determining whether stock valuations, particularly those of the mega cap US technology companies, are sustainable, given that investors are pricing in significant earnings growth expectations. Amy Wu Silverman is with me, Head of Derivative Strategy at RBC for Capital Markets. Amy, I look at the euphoria around Mag 7. I'm bored actually talking about it. I just want this thing to be over this week in terms of risk. But are we sleepwalking into this tech earnings season naked and unprotected? Good morning.
Good morning. I look at this crucial week as well. And when you look to the derivative sentiment around this huge week for Mag 7, it's fairly complacent from an options perspective. You've really seen waning call exuberance compared to what we saw last year. But you see similarly on the bearish side too. So it really is just that overall option prices are quite low. They're not really pricing a significant magnitude of move. And one stat I'll give you is Meta, among all the stocks that are reporting this week, has the cheapest implied move for the entire week and for the Mag 7 too.
Begs the question then, Amy, okay, I'm long equity, I have my allocation to Mag 7, and I have some allocation to breadth. When you look, and you do this very well, you talk about how cheap the ratio is to hedge myself in Meta. Is it too late, or is it probably a little bit more pragmatic to spend a little bit on protective risk? I mean, you say Meta is at its cheapest ratio of implied move to its historical in 8 quarters.
That's exactly right. And from our perspective, something we've spoken with clients about is just this relative inexpensiveness compared to heading into other quarters for the last 8 quarters of doing a little hedging. And I think one difference here, Manus, is that more folks are long, more folks have jumped in the pool than they were 6 months ago when the AI craze first started. The goal then was really to participate in that upside. And to some degree, we're far more long into that positioning. Whereas if you actually looked to the downside and what people have to protect themselves, that's pretty inadequate because folks have just used these stocks as flights to safety, but obviously they have their own idiosyncratic risks.
Now, look, I know you and Halima Croft work closely together. We quote Halima when it comes to the geopolitics. We quote you on the equity. But you're both coalescing around Middle Eastern risk. It's not exactly running away in a manifest way in the oil market, but the two of you are concur that this is something that we should pay a lot more attention to. We've just spoken to Alex in Florence. They're not talking about Iran in Florence, which I find very difficult to believe. But you tell me what you and Halima believe.
Yeah, you know, what I love about talking with Halima is if you look back to Russia, Ukraine, you know, she was one of the first and foremost people to say, look, this really could be an issue. And it turned out to be, I think at that time, most other market participants were not expecting an escalation. And here we are again before the Middle East. I will just say on a 10,000 foot level, equity tails, so that the risk to hedge a 3 standard deviation move in the market is at historical lows. It has been at historical lows for a long time, but these geopolitical risks keep rising and rising. And, you know, we have various ways to express that. That's what we work with Halima on. Sometimes this could be individual names or through energy, or it could just be overall market hedges.
Do you think we're at some kind of extremes in sentiment, Amy? I mean, I look at some of the surveys, the Bank of America survey, we're extremely bullish, extremely concentrated. Do you observe any extremes that we should be more agitated about?
Yeah, you know, I guess this is the time for me to remind all folks that 6 years ago, February 5th was actually Volmageddon for us in the volatility community. It was a major event, but I think not for everyone else. But, you know, there are these lapses in volatility that we have become quite complacent about. Volatility in terms of selling it, the growth in notional trades that simply take volatility and harvest it for premium have become incredibly popular. But, you know, there are these spikes of volatility. It just hasn't happened for a while, but it certainly doesn't mean that it cannot happen. And those are the risks I'm concerned about when the unknown unknowns from geopolitics start to be added to the mix.
And guess who's in Florence this week? It is Halima Croft, bounding around. So I'd say she's probably bending a few ears over risk, or I'd say probably a few people are bending her ears, asking her for her opinion in terms of what happens in the Middle East. Listen, Amy, thank you very much. Amy Wu Silverman there from RBC Capital Markets. Vol is cheap, everybody. Coming up, I've mentioned a couple of times, Diageo slumps, disappointing investors again. We'll hear from the CEO, Deborah Crew, what she had to say about the results. Stock down 3 1/4.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
It's Bloomberg Brief. I'm Menace Cranny in New York. So the British distiller Diageo disappointed investors again with lower than expected sales earnings. The CEO, Deborah Cruz, spoke with the Bloomberg team a little bit earlier today.
And if you exclude our Latin America business, our group organic net sales grew 2.5% on the half, and that was with good growth in Europe, Asia Pacific, and Africa. And we have great highlights underneath this. Our global beer business, led by Guinness, plus 14%. I've talked about taking tequila around the world, so if you exclude kind of NAM and LAC, where of course tequila's been for a long time, and you look through the other regions, we doubled net sales in tequila. You know, we also had great growth in China, plus 18%. We had strong growth in India, plus 9%, lapping double digits. Johnny Walker, plus 21%. So there's a lot of good news underneath of that, and that really is what underpins our strength, across the medium term. So we are navigating in the near term. Yeah.
Yeah, so those are the strengths, those are the areas of strength. So outside of Latin America, more positives to point to. You talk about tequila around the world and to Guinness as well. But what about the United States business? What's the position on pricing there and your willingness to compete on price in that business? Do you compete on price if that's what everybody else is doing, or do you stick with your premiumization strategy?
Yeah, look, so North America for the half, we did have the minus 1.5%. That being said, it was sequential improvement, which is what we were looking for. We were lapping. The U.S. market is still normalizing from the super cycle of COVID. And so we've seen some supply chain disruptions, but also the consumer is also normalizing, getting back to that kind of a post-COVID new normal. And within that, there is certainly some pressure on the consumer. There's still relatively high food basket prices, still tackling inflation. That being said, it's a resilient consumer, and they are willing to spend on things that matter to them. And when you look across our portfolio, we do have strength in our super premium priced products. If you look at what's growing in the industry right now, it is all super premium priced products in the U.S. Actually, value, so premium and below, is declining. So we are still seeing consumers come in to premium prices. It was an intense competitive environment. And we are focused on winning high quality market share. We're not just chasing, we're not going to erode profitability and brand equity by chasing, a couple basis points of share.
The CEO of Diageo, Deborah Cruz, speaking to the Bloomberg team a little bit earlier. For more, let's get to Dasha Afanasieva. Dasha, obviously, when you rip out South America, these numbers don't look so bad. But in terms of less than 3 months into profit warning, what would you say at this juncture?
Yeah, I mean, they don't look so bad in the sense that if you strip out Latin America and the Caribbean, which they warned about, then you get to positive growth. But they're still very far from the midterm target of 5 to 7. And now we don't even know what kind of what they mean when they're sticking to the midterm target, because it's no longer 2024 and it's no longer 2025. But the greater concern and the thing that they weren't, didn't disclose in November, either because they didn't know or because they didn't think it would be such a big issue, is the weakness in the US. And it's the weakness in the US consumer that's been struggling with stubborn inflation and with high grocery costs, et cetera. And they've been trading down. So even in that clip, Deborah Cruz is talking about how premiumization still works. The results in the US show that they certainly don't. And I imagine for her, it's been a very, very humbling few months.
I mean, this goes back to the whole concept here in the United States. I was with the CEO of Hennessy, Moet Hennessy, just a few weeks ago at the retailers gathering in New York, and their raison d'etre here is to deliver premiumization and engagement with the U.S. consumer. The problem is the U.S. consumer doesn't really want that with booze. It's not Europe. Bit of a fact of the day there. Diageo's giving the market that all the bad news. I mean, do you get a sense that she laid the table of all the bad news is out there, or not?
No, I think they don't seem to know exactly when the recovery is going to come. And you could just read it as, you know, if there's easing, then maybe everything just comes back. But there's a bit of a disconnect there as well, and I don't think it's going to be that easy because it feels like there's been a lag and a mismatch because economic news in the US has been reasonably positive the last few months, and that's when Diageo's actually had a tough time and people have been trading down, and there is this increased price competition. So I don't think Diageo, despite all of the investment that they talk about that they put in data, in the same way as they were completely taken by surprise by Latin American Caribbean having these massive inventories, I think that they might have an information gap in the US as well, and they can't really predict how the consumer's going to behave in this macro context. They did talk about this.
We've got to leave it there. I'll leave you with the thought: Buchanan Scotch with pineapple in it. That could save the day for all of us. Dasha, thank you very much with the very latest on Diageo. Dasha Afanasieva joining us there. And for a Bloomberg Scoop now, Volkswagen pushing back on the plans to seek outside investors for a battery unit after slower demand for EVs. Joining me now is Bloomberg's Craig Trudell. It's been a bruising week for electric vehicles, hasn't it? VW joins Renault pulling back in this space. Run me through the top lines here. Good to see you.
Yeah, a bruising week, and it's only Tuesday, right? It is really incredible to see this sort of back-to-back, set of developments, and it's sort of a, what a difference a few years makes story in that, we saw so many IPOs, so many SPAC deals for electric vehicle companies, and we've seen so many of those companies sort of go sideways, and so, we're kind of seeing now the incumbents, belatedly maybe trying to take advantage of the appetite in the markets for EV equities, and that story has sort of come and gone. And so we've seen Renault set aside plans to list Ampere, its electric vehicle operations, and Volkswagen following suit here with PowerCo, which was going to be their battery business, and they were going to do a lot of work in-house. I think one of the sort of bigger overarching stories we're seeing with the industry is a lot of the incumbent car makers really struggle with that. We'll see that with GM as well today when they report earnings.
Okay, we're going to keep an eye on that. What was it? I mean, Renault was looking for a valuation of as much as 10 billion for the business. So, it's a tough year for IPOs last year, for sure. Craig, thank you very much. Craig Trudell with the very latest. And we will get, as Craig was just saying, we will get the GM numbers a little bit later on today. Tune in to Bloomberg TV and ready for that interview with the CEO, Mary Barra. That is at 10 a.m. New York time. Something is shifting globally in this EV story. Snapshot of where we are on currencies. Europe avoids stagnation. So that has left us flat as a pancake in Europe, 108.38. I just had HSBC saying in the near term, they still see a lower euro for them. The dollar is flat, 12.35 at the moment. And cable, don't forget, Bank of England hits the tape on Thursday. Will there be a dovish pivot there? What will that do to sterling? According to HSBC, it will deliver a dovish tilt. Coming up, we'll set up the events for the day.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Brief from Manus Cranny in New York. A look ahead for today. It's going to be a big day in terms of data and reporting. JOLTS, job openings data at 10 a.m. Eastern Time, plus a consumer confidence reading at the same time. Earnings on the slate include General Motors. What will they have to say? What will Mary Barra have to say about electric vehicles? UPS comes up before the bell, and then we swing to the closing bell. We get the reports from Microsoft, Alphabet, AMD, Starbucks. Have you bought yourself a coffee in Starbucks recently? Do you tip the full amount? That's the question. Some of the other stocks that are on the move, maybe you want to trade and have a look at Tesla. Do you look at it vicariously as an Elon Musk trade as he delivers the first human-received Neuralink implant on Sunday? After the bell, as I say, you're going to hear this time and time again, Microsoft reporting recovery in the cloud business and the PC demand. That's going to be critical. After the bell, Alphabet deliver their results. That's going to focus on generative AI and the cloud. So it's to what extent are you prepared to pay for the cloud, and what extent are you prepared to pay for AI? So we have equity markets just prevaricating at the moment. FX is flat, so it's hard to get excited about that. Stocks on the NASDAQ, they just slip into the red ever so slightly, trading at 17,699. That's it for Bloomberg Brief. Surveillance is right up ahead.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to be produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. What we do at Breakthrough, we look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, you know, a year in terms of what we have to replace.
I think the market's already pricing in the rate cuts to a certain extent.
I don't think the Fed's going to move this month. I think that they may send a signal to help people begin to ground their expectations.
They want to send a consistent message to markets that policy is consistently moving in a decent direction.
I don't think we're in a situation where we're going to be seeing a pivot, unfortunately, which I think is what the market is probably been broadly expecting.
We've taken the punch bowl away, and markets haven't fully adjusted.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
In many ways, the week begins right now, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market on the S&P 500 pulling back just slightly. Later on today, big tech reports, Bramo, Microsoft and Google after the bell.
This is really the kickoff of the real earnings season, I should say. The earnings season that accounts for the vast majority of the gains that we've seen so far this year in markets. And a lot of people are coming out and saying, because this market is so disproportionately hinged to 7 companies, so too will the performance be to the earnings of said firms.
Let's talk about expectations and year-to-date gains last year, not just on the S&P 500, but on some of these single names. Microsoft up 57%, Google up 58%. Just how high is the bar later on this afternoon?
I've read mixed things. Some people are saying the bar's already been lowered, particularly for Google and particularly for Apple. Other people saying that they're high expectations just because they expect them to keep going. I think it depends on which company you're talking about. There is some sort of fission within here. There's NVIDIA, where everyone expects to come out, beat, and then some, and basically blow out of the water every kind of expectation. And then you have the likes of Apple, where people just are hoping that they hang in tight. It's going to be unclear. I'm curious to see how people take some of the projections.
Likewise, we'll talk about US exceptionalism a little bit later on today. Speaking of that, in Europe, an upside surprise is stagnation on GDP. You notice that? We're talking about how high the bar is for US equities. How low is the bar for Europe right now?
Did you see the fact that Italy and Spain were the outperformers? To me, this is sort of, again, the reversal of fate of the peripheral region of the Eurozone really outperforming Germany, which is the sick dog of Europe, and continues to be in contraction as expected, and yet still maybe avoiding some sort of recession. And this is a call for some sort of victory.
The euro, 108.39 on stagnation in Europe. Surprise yesterday, crude lower by 1.6%. Just to see that AMH yesterday, crude closing at 76.78 on WTI after the tension over the weekend.
Well, one thing Anne-Marie Hordern said to Alex Steele at this oil conference today was the fact that the supply is still there, just how it's getting to the destination has changed because of what's going on in the Red Sea and the Gulf of Aden. The issue will be if supply is really hit. And you have to remember the backbone of supply right now is the United States of America.
Still trying to figure out America's response to the events over the weekend, still calibrating that decision. What's your view on what we've been told over the last 24 hours?
We have reporting that the retaliation is going to be much bigger than we've seen from the United States, given the fact that we have seen Iranian proxies hit U.S. bases in Iraq and Syria some 160 times. So this will be much tougher. The question is, of course, when the U.S. respond, how that response will be and how fierce. Norm Rule said it yesterday. the Biden administration is going to be walking a very tight rope when it comes to this, because they have made it very loud and clear. They do not want an escalation in the region, but they have to respond fiercely to this because 3 Americans are dead.
I'm just struck by what Tony Blinken said yesterday. I know you picked up on this also, saying that I would argue that we've not seen a situation as dangerous as the one we're facing now across the region since at least 1973. How do you calibrate a tinderbox with the necessity to respond?
Compare and contrast what they were saying back in September. Anne-Marie, do the compare and contrast. What they were thinking about the region only 4 or 5 months ago compared to where they see it at the moment.
September 29th, 2023, Jake Sullivan, speaking at the Atlantic Council, said, the Middle East has never been quieter in decades. We have not seen it. To be fair, he likely didn't live through the 1970s as an adult in a policymaker form, but then Blinken yesterday saying it's actually the dangerous we've seen. Just in exactly 4 months' time, this administration has changed how it views the region.
It's a massive change. $77 on crude right now. WTI $76.95. Quick check of the price action for you on equities as well, not just on crude. Equity futures on the S&P 500 pulling back just a touch. We're down by 0.1%. In the bond market, Bramo victory lap a little bit later this morning. Yields lower by a single basis point, 4.06% on a 10-year. Treasury refunding shaking up this market yesterday.
It was just even the projections, right? We get the full kahuna on Wednesday, but they came out. And to me, the fact that they asked for $760 billion of net borrowing this year, below the $816 billion, ignited a rally. So again, how much is this because tax receipts are going to come in bigger?
True.
And how much are people going to say, this is a bit of political maneuvering to give a little bit of support to a bond market that may have other issues later this year?
Treasury's up, yields lower. That's the story of the past 24 hours. The story of the next 60 minutes. Brian Levitt of Invesco, head of big tech earnings. He's joining us shortly. Then later, John Lieber of Eurasia Group on heightened tensions in the Middle East. Constant Hunter of macro policy perspectives on the Fed's path forward as the 2-day meeting begins for the Federal Reserve down in Washington, D.C. We begin with our top story. The equity market at all-time highs going into mega cap tech earnings. Brian Levitt of Invesco writing this. Naysayers warned of economic hurricanes. 5 years of unemployment above 5% and the worst earnings recession since 2008. Fast forward 2 years, thanks to quickly fading inflation, a 26% advance in 2023, and we're now celebrating the S&P 500 index hitting a new record. Brian Levitt joins us around the table. Morning, Brian.
Good morning.
Brian, you said it to us. I remember the conversation. Lisa does as well. You looked down the camera and you said to us, I'm a FOMO guy. And I think we all laughed. Are you still a FOMO guy?
I am still a FOMO guy. I mean, I want to be exposed to equities in an environment after the peak in inflation, after the end of tightening, after the peak in interest rates. It's not to say that every day or every week is going to be glorious or I'm going to be missing out every day or every week, but we're in an environment where over the next few years, markets should perform well. That's typically the pattern post-peak inflation and peak tightening.
Let's define FOMO in 2024. FOMO a couple years ago was GameStop and AMC. Right now, it's NVIDIA, it's Google, it's Microsoft. Do you basically lean into big tech and lean out of small cap?
Well, here's the challenge. So when you do what I do for a living, you're asked to write outlooks in September and October, and the story of 2024 was supposed to be, all right, interest rates are going to come down as we start to price in rate cuts. That normalization of the yield curve will lead to some small cap, mid cap outperformance. You got a 20% rally in small caps in 2 months. Right? So I wish it had played out over a longer period of time. What we're in now is an environment where the economy is hanging in, but pointing towards below trend growth, and that's still in the short term favors the more higher quality, larger cap stocks, and that's what's been playing out this year. What we look forward to is the normalization of the yield curve and a broader market rally.
People who are paid to have angst have put out lots of reports recently talking about the tech bubble of 2000 and raising questions about whether we're similarly concentrated. I know JP Morgan among them. Do you adhere to that, this idea that we could be hinged to some sort of massive disappointment and downdraft if one of these tech earnings disappoints?
Maybe in the short term, but I don't think about this like I think of we're not partying like it's 1999. I mean, if you look at a lot of those names were trading at either valuations you couldn't calculate because the earnings weren't there, or extreme valuations. This is not the same picture. In many cases, the Magnificent Seven or many of the Magnificent Seven are actually delivering on the promise. So yeah, valuations might be a little bit extended, but these are also the companies that are growing far beyond the broad market and far beyond the economy. What I'm looking forward to, given average valuations and the other 490 names, is can we, and international markets, can we see this broaden out? It started to in November and December because of expectations of a normalized yield curve. We're backing off of it a little bit because maybe we don't get 6 cuts this year. But over the next couple of years, we should expect that normalization of the yield curve and finally getting out of this COVID cycle, this COVID environment. So that's what I would, if I have FOMO, Jonathan, it would be in the cyclicals, the small cap, the value, international over the next couple of years.
Can we just sit on the index just a little while longer? It makes people nervous when they see all-time highs. You've written about why they shouldn't be nervous at record highs. Why shouldn't people be nervous?
Well, I think we've had 1,186 new highs in the S&P 500 since 1957. So that is once every 2 weeks. So you should expect a new high every fortnight. And there's nothing, you know, I've always used the line, only small minds are impressed by large numbers. Like, let's not be impressed by this. The averages aren't mean reverting.
I think that's personal.
Yeah, I'm insulting everyone there.
No, I'm kidding.
The averages aren't mean reverting. If you think the world is going to be better for most of us and for the 500 largest businesses in America, then you should expect many new highs over the course of your life.
Well, let's talk about the world. Which world? Are we talking about the US economy? Are we talking about Europe as well? China too? China's struggling. Europe, we talked about Europe. Bit snarky, I know, but an upside surprise for the continent at the moment is stagnation.
It is.
What does that tell you about how challenged things might be for multinationals?
Well, it's interesting. I mean, if you think about it from where those countries are relative to trend and where they're likely heading based on their leading indicators, you look at Europe, you look at China, things may actually be improving a little bit, albeit off of rough levels. So, as you know, as I've always said, these markets care about better or worse, not good or bad. And so what you're seeing in the U.S. is, and what you should expect to see, is a little bit of a slowdown. And so the slowdown favors, you know, these top-heavy names that we've been seeing. Outside, you may actually be getting a little bit of a recovery.
But when we've seen going on in China, especially in the Chinese stock market, why haven't we really seen any of that impact in the U.S.?
Why are we not seeing the impact of what slower Chinese growth? Because the United States, we are seeing it a little bit in the broader market. You're seeing it less so in the companies that are able to grow irrespective of the macro environment globally. So for some of the companies that are more cyclically exposed to China, you're seeing it. But again, these markets in the last, at least this month, is being driven by a handful of names again.
Brian, you're going to stick with us. Let's talk about a single name. Elisa, UPS. Outward numbers. The guide for 2024, not great.
No, basically saying that they expect revenue this year to be $92 to $94.5 billion versus an estimate of $95.7 billion rounded up. Looking at weakness both domestically and abroad with respect to just in general, some of the activity. Also talking about a fourth quarter impairment charge of $84 million. Looking through the numbers, and I'll keep looking through the numbers, but I got to say, this is usually a bellwether type of stock. Is this about people shipping around goods that necessarily is independent of the economy, or does this indicate a lack of willingness to spend to the same degree?
We'll come back to that story. The early price reaction to that is the stock is down by about 4.9% in the pre-market. Equity futures more broadly negative by 0.1%. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. More signs of waning demand for EVs, with Volkswagen pushing back plans to seek outside investment for its battery unit. Europe's biggest car maker is also facing doubts it can make its own batteries at scale, according to Bloomberg sources. Renault also scrapped plans to publicly list its EV business this week. Walmart is offering a new incentive for U.S. store managers. Starting in April, they'll receive an annual stock grant of as much as $20,000, with the potential to make over $400,000 if they're high performers. It's the latest effort by the retailer to attract and retain staff. Just last week, the company announced it will raise the average store manager salary 9%, from $117,000 to $128,000. Fans hoping to attend this year's Super Bowl in Las Vegas will have to fork out a record amount, with the average ticket price coming in at $9,800, the most expensive ever. That's just to attend the match between Kansas City and San Francisco. Rooms at some hotels are going for more than $1,000 a night. No word yet on whether Taylor Swift will be in attendance. That's your Bloomberg Brief. John?
I know you're tracking that, Yahira. Thank you. The latest on Taylor Swift. So $12,000 basically for the weekend, right? Once you account for flights, accommodation, throw in some
Vegas,
food.
If you're a drinker,
Well,
you like gambling.
all
This
I can
pushes
say.
what, 15K?
So at what
It's
point
ridiculous.
do we hear about the Taylor Swift inflation phenomenon once again?
Are we gonna
All of a
blame
sudden-
Taylor for this?
Yeah, everyone's going to say
Okay.
that. This is the Taylor
She
Swift
might not
effect.
even show up.
It doesn't matter. How much is she the responsible for a 70% increase?
She's the reason we've got to pay these high ticket prices.
Exactly.
Yes.
There we go.
According to Bramo. Up next on the program,
Just say.
Big Tech taking center stage.
I do think that fundamentally the strengths of these companies is still going to be pretty robust. Obviously, cloud AI is going to be the thing that's moving the dial.
That's coming up next on the program, live from New York City this morning. Good morning. You're watching Bloomberg Surveillance.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Live from New York City this morning. Good morning. Equities pulling back just a touch on the S&P 500. We're negative here by 0.1%. Stock to watch this morning. Lisa, UPS in the pre-market down hard.
And really, I'm looking through it, and it's both a volume story and profits per package, which is not really encouraging when it comes to margin pressures. U.S. package revenue was down 7.3% year over year, came in almost $1 billion or $500 million below the expectation. International package revenue, kind of the same, down 7% year over year. What I thought was interesting was that the revenue per package came in at $13.11 versus an estimate of $13.30. Again, not massive, but are we seeing both people not wanting to ship things around, not wanting to pay the extra cost for premium, and basically having to take a hit as you pay higher costs to some of your workers and to all of the other supply chain issues? How much is this a bellwether type of name?
It's a miss for the outlook. The stock is down by a little more than 4%. To Lisa's point on UPS, is that more important to the economy than maybe the tech numbers we get a little bit later? In about 15 minutes' time, we should get numbers from General Motors, so look out for that as well. Under surveillance this morning, big tech taking center stage.
I do think that fundamentally the strengths of these companies is still going to be pretty robust. We know that obviously cloud AI is going to be the thing that's moving the dial. But what is kind of an unknown at the moment is the rate at which corporations are going to be reopening their purse strings, and that obviously has huge implications for those cloud players.
Microsoft, Google reporting earnings later today. Apple, Meta, Amazon due out Thursday. 5 names, a combined market value exceeding $10 billion. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence, joins us now. Anurag, big afternoon coming up a little bit later, then again on Thursday. What are you and the team focused on later on today?
I think the biggest thing is the contribution of AI to Microsoft workloads. I think that is the single biggest thing we're going to focus on is how much is cloud getting a push because of that. And that remains the only thing I think people are focused on, because for the last 2 years, we have seen cost rationalization, people not spending as much on cloud resources. And I think this is the year we're going to see a rebound.
So where do you think is going to be the winning sort of recipe, at Microsoft or at Google?
I think Microsoft is a little bit ahead in terms of cloud performance only because of their relationship with OpenAI. But having said that, Google has a lot of intellectual capital behind them. They're really good in search, and I think in the long run, they should see the benefit for their cloud business also.
We were talking about this yesterday, and I got some feedback about Binging. I am curious, though, how much we end up seeing Microsoft gain traction with some of their artificial intelligence to ChatGPT around the Bing versus the Google.
See, in the long run, I think Google will still dominate. I think there is going to be a lot of noise and fluctuations in the midterm. I do not think it's going to, have that big of an impact. But at the same time, I think Google needs to come out and show that they can have a product that's very similar to ChatGPT, and it works, pretty much the same.
Anurag, can we talk about a product coming out of Microsoft? I keep hearing about this Copilot software. Anurag, what is that? How hopeful should we be?
It's pretty much you take any software that you have, whether it's your Office or whether, if you're writing code, GitHub. This particular product helps you increase your productivity. So if you have, for example, a GitHub Copilot and you're starting to write code, it will help you write code along with yourself. It's like a ChatGPT, but for that particular product. And I think that is how Microsoft is looking at monetizing a lot of its products. It is the first one in the market to go out with a lot of these, you could say, add-ons because of their relationship with OpenAI. And we're seeing other companies follow. ServiceNow talked about their product. I think Adobe is one of the ones that have done a really good job of creating their Copilot. So across the entire software ecosystem, you're going to see Copilot show up, not just this year, but, for the next several years.
Anurag, I just wanted to finish on the politics, if we can, the geopolitics specifically. Quite clearly, some of these companies that you've identified are surfing this AI wave. The cloud business is absolutely exploding all over again. Do you think that we do start to see this polarization between the companies that can serve companies over in, say, China and ones that can't?
Yeah, I think it's going to be more restrictions on the cloud players to, work with companies in China. Now, the fallback of that it's not going to be on the likes of Amazon or Microsoft because they don't generate that much money from China. But the bigger problem could be that, in the retaliation, if they go after Apple, that's, I think, bad news for Apple in the long run because they pretty much make most of their products there in China.
Interesting. Anurag Rana. Anurag, thank you, sir, of Bloomberg Intelligence. Those earnings coming up a little bit later on this afternoon. Apple, Microsoft on deck, and then the rest of them. Amazon, Meta, Apple on Thursday.
I'm wondering also how much sort of quiet attention AMD is going to get, because a lot of people are saying that they should be included in the Magnificent 7. They should be the Magnificent 8, including AMD, or else boot out one of them. I just think that it might be interesting, especially in light of the chip focus and how much they're really accelerating that production.
Is that the pitch coming from AMD? Just to be clear here.
No, actually, it's not. It's a couple investors, including one who is a seed investor of Facebook.
Brian Levitt of Invesco joining us around the table. Brian, let's build on some of this. The geopolitics. How does that shape your view of some of these multinationals right now?
I try and look beyond the geopolitics to the best of my ability. I tend to ask myself two primary questions. One, is it going to affect the trajectory of the U.S. economy? And two, is it going to change what the Federal Reserve is going to do? And as long as these events remain relatively regionalized, then the answers to those questions are generally no. And so far, the market has looked past it. If they get broader, then it may be a different answer. We had talked earlier, I had heard 1973 mentioned. 1973 is a scary thing to think about because the markets were down like 50, 60%. You didn't recover for a long time. I think there's some critical differences between now and 73. One being the U.S. being a primary driver of supply in the oil market, and two, the Federal Reserve having significantly more credibility at this point than it did back then.
But outside the oil market, the Red Sea is really used for also consumer goods.
It is.
So isn't that a concern when you look at inflation, the prospect for potentially bottom lines having to have an impact?
Yeah, I mean, so you've got 15% of goods estimated that's going through the Red Sea, 12% of oil. So it's not ideal, right? It's happening at a time that's not ideal. But to me, the critical difference that investors should think about is between now and 2021, 2022, when we did get significant inflation and what was driving that. Back then, people had money in their pockets and workers had just slashed a bunch of inventory and a bunch of workers. And that's really what led to the 9% inflation. So today we're dealing with what's going on in the Red Sea at a time that's, let's call it inopportune, but businesses have inventory, businesses have workers. So it's a very different story than we were looking at a couple of years ago.
How much is not paying attention to this just basically conditioning of markets? I go back to what Scott Shelton said. He of United ICAP saying it's been one of the more toxic trades for the last 2 years. Every time you buy, because of geopolitics, you lose money. And that's basically been the story. How much are you concerned that there isn't the same risk premium that might be baked into markets that some people say are priced to perfection, just based on the fact that you do have the potential for a flare-up that we cannot foresee?
Well, look, I mean, we always seem to have these potentials for flare-ups. I mean, we can go back in history, even recent history, Syrian civil war, when the Russians initially went into Crimea, even thinking back to U.S. troops in Iraq and Afghanistan. I mean, if you look, typically you draw down early and then over the next period come out of it. So the markets have become preconditioned. What I would say to investors is don't make it your base case in your portfolio that the world is going to implode, because history tells us that that's a losing proposition. If you want to hedge, think about, exposure to gold or, commodities. You don't need significant, 5-10% exposure can help provide some insurance in your portfolio.
Brian, let's finish on one single name. Lisa went through the earnings from UPS. The stock is down by 4.65%. We'll get into the details as the show progresses, but I think it presents an obvious question. Do I want exposure to these big secular themes, AI, or do I want exposure to the cyclical names?
I think over the intermediate term time period, which I would define as beyond 3 to 6 months, you're going to want more exposure to the cyclical names. What we're challenged with right now, and everybody has to remember this, the Federal Reserve wanted to slow down this economy. We needed to slow down this economy. We're seeing the lagged effects of all of it, and so far we've been generally stable, but this economy will slow. Now, the question is soft landing, hard landing. Doesn't seem to be enough excess, enough leverage to have a hard landing. But in the near term, this is going to be a market that's going to focus on a slowdown. The reason why I say beyond 3 to 6 months is because as we come through that slowdown and normalize the yield curve, that's when you're going to want more exposure to cyclical names.
Brian, it's good to see you. Great to catch up. Thank you, buddy. Brian Levitt there of Invesco. UPS down by something like 4% in the pre-market. Earnings from GM coming up shortly. Up next on the program, the US weighing its response to the deadly drone attack in Jordan. That conversation coming up next with John Lieber of Eurasia Group.
I think I'm melting. Let's go to a cooler place.
How can we make tomorrow better than yesterday?
You can't waste any more time.
It's our all-hands-on-deck moment.
Around the world, people are working for a better tomorrow.
What we're doing is mind-blowing.
So this would be a carbon-neutral jet fuel.
A little worm that can actually dissolve plastic. Creating clouds, this is the definition of thinking outside the box.
I believe when history is written and we look back at this moment in time, this will be when we started to transform the way we live to inform the future we want. This show is about solutions and the people behind them. My name is Nikolai Coster-Waldau, and this is an optimist's guide to the planet.
Jamie Lannister on the runway.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So for many market participants, the week does indeed begin today. The two-day meeting beginning for the Federal Reserve down in Washington, D.C. a little bit later this morning. Then this afternoon, earnings from Microsoft and Alphabet, or Google, as you might say. Equity futures on the S&P 500 pulling back just a touch with negative 0.1%. On the NASDAQ, we're down by 0.06. A heavy weighting of these benchmarks goes to big tech. 5 names, $10 trillion of market cap coming this afternoon and Thursday as well. We've had numbers from UPS, the outlook disappointed. At least the numbers from GM just dropping across the Bloomberg.
Yeah, and actually beating expectations, expecting adjusted earnings per share for 2024 of $8.50 to $9.50 versus an estimate of $7.70. Just going through the numbers here, they do expect to cut expenses by $1 billion. I am curious about exactly where they do. They expect industry sales of about 16 million units. But just going through this, it looks like North America did outperform. I just want to point out, this comes at a time when it's not just North American auto manufacturers that are experiencing some issues. BYD, the Chinese car manufacturer, overnight actually saw disappointing earnings as a result of profit margin contraction because of their competitive advantage. We'll keep going through these numbers, but to me, the idea that they actually beat highlights the fact that they are maneuvering, albeit with cost cuts that we hope to hear more about.
So UPS dropped about 4% after earnings. GM's up about 4% after these results. Positive in the pre-market now by more than 5%. Lisa, good news is they've got a better story to tell this morning, because for the broader environment, as you just suggested, not great right now. We need to talk about EVs with Mary Barra a little bit later on today, the GM chair and CEO. The news over the last few weeks, Hertz dumping 20,000 EVs, Ford cutting production of the F-150 Lightning. Hasn't been great, has it?
No, and basically there's been a retrenchment in expectations. We heard that from Ford and we heard that from General Motors, and this expectation that yes, there will be that adoption, but it will be slower. Just looking through some of these numbers, the net profits here are better than expected. And how much of this really is hinged to the lust for big trucks and the fact that people don't really haven't made that transition yet. The net income for 2024, $9.8 billion to $11.2 billion versus the estimate of $9.17 billion. Really coming in pretty strong.
Stock is positive by a little more than 4% in early trading. A little bit later on today, around 10 a.m. Eastern time. Don't miss this conversation with Mary Barra, the General Motors chair and CEO, live on Bloomberg Television. Under surveillance this morning, Iran urging diplomacy as tensions rise following the deadly drone attack on a US base in Jordan over the weekend. The country's foreign minister continuing to deny involvement in the attack, which killed 3 service members and injured dozens more. Political pressure is building on President Biden to respond. National Security Council Coordinator John Kirby telling reporters yesterday the president is weighing the options before him. AMH, what are those options?
Well, this is the big question. What are the options the United States is going to do? We know from our reporting that it is likely it is going to be a more forceful response than we have seen the U.S. take, given the fact that U.S. troops have been hit on the bases 160 times that we've seen these Iranian proxies target U.S. troops. So it'll be more forceful than that. But And every administration official you talk to, there is a but. They continuously say they do not want to invoke a wider regional conflict. So it's not going to go as far as I think maybe some, especially Republicans, want.
A question we can ask this morning: to prevent a war, do you have to show a willingness to engage in one?
Show that you're willing to actually go on the massive attack. This is what the Trump administration actually did when it came to going after Iran and Qasem Soleimani. They did an attack that the Iranians were really, frankly, freaked out about. They did some retaliatory measures in Iraq, but then on back channels, they went through a number of interlocutors and said, we are done. We do not want more bloodshed in the region. And then that was it. Remember, then COVID hit, and that story quickly went away. And that was why.
We'll throw that question to John Lieber of Eurasia Group in just a moment. Wanted to turn to this story as well. Lisa, you were all over this just yesterday. The US Treasury cutting its quarterly borrowing estimate. The estimate now sitting at $760 billion. That's down from a previous prediction of $816. The announcement helping stoke a rally in stocks and bonds. The Treasury saying the estimate was reduced thanks to higher net inflows and more cash on hand than previously expected.
And just remember that really what ignited the incredibly rally, or at least turbocharged it last November, was that Treasury refunding announcement back then that really concentrated more of the borrowing in T-bills. Look, a lot of people are going to be talking about the political aspects of this, and Peter Bukvar of Obliquely Financial came out and said there is also political maneuvering on the part of Janet Yellen in wanting not to spook the Treasury market. We'll hear in the coming days, Wednesday, about just how the issuance is going to come out. But the truth of the matter is, later this year, the U.S. is expecting yields to be lower because the Fed's probably going to be cutting. So why not wait until then to actually increase some of your issuance if the yields are better? Honestly, it's pretty savvy. You gotta hand it to her. She understands the market.
They're managing it well.
Yeah.
Understands other things as well, based on what I heard yesterday afternoon in a podcast that she did over in Chicago. Did you see that?
Yeah, I was hearing about it.
She did a podcast with NPR, and she was asked a number of questions. One, she plays Candy Crush, and she loves Brick Breaker when she had a BlackBerry, but also she prepares for everything. The Treasury Secretary said the first time she smoked weed, she actually prepared, but then that gave her an addiction to cigarettes.
What was it, 2 or 3 packs a week?
Yeah.
Is that right? It's amazing. It was nice to see Janet Yellen show a little bit of personality.
Totally different
on
side
this
of her.
podcast.
Maybe.
Not that sort of robotic outlook on the economy.
Was
very,
it
very different.
In an In-N-Out burger, as she
loves
ate her
burgers.
fries.
Super
Yeah,
chill,
exactly.
apparently. Let's see how chilled you are about this story. Elon Musk announcing the first human patient has received a brain implant from Neuralink. The startup hopes to one day allow humans to control computers with their minds. Posting on X, Musk saying, quote, the first human received an implant from Neuralink yesterday and is recovering well. Initial results show promising neuron spike detection. Last year, Neuralink said it expects to perform 11 surgeries in 2024. Bramo, thoughts?
I think it sounds so good. I think we should do it. No, look, I mean, honestly, this isn't necessarily going to be the future for our computer use anytime soon. This is sort of an experiment, and kudos to him for thinking brightly. I personally would not have a Neuralink in my head, but also the people who are doing it have problems with their limbs. And so it's actually, it's geared toward people who actually might get some real use in a material way.
For people who are paralyzed, and this could be incredibly optimistic for their lives, but the fact that Elon Musk also talks about one day helping merge humans with artificial intelligence, that's when that's a little bit unnerving. I know you must be nervous because I know you don't like AI.
Yeah, stage 2 concerns me. Stage 1 is super promising. I think we're all on the same page about that.
Yeah, look, I think down the line, as somebody who does enjoy science fiction occasionally, it's nice to have big dreams and see how it plays out. Whether any of us wants to become
telepathy,
a robot right now, not clear, but later on, when the bones hurt, let's go.
I'm not ready for that just now. That's the latest on Elon Musk and Neuralink. Let's turn back to the latest in the Middle East. Iran continuing to deny involvement in this weekend's deadly attack on US troops in Jordan. The country's foreign minister saying active diplomacy is underway, writing on X, quote, the White House knows very well the way to end the war. The current crisis in the region is political. John Lieber, Managing Director in the United States, Eurasia Group, and former policy advisor to Senator Mitch McConnell, joins us now for more. John, wonderful to catch up with you, sir. Let's start here. Have you developed a base case as to how you think the US will respond to the attack over the weekend?
So the U.S. has to respond here. They can't allow the deaths of 3 U.S. troops to go unanswered, and that's both a problem for the Biden administration in foreign policy in the Middle East, but it's also a pretty big political problem for him in the United States. And the key question we're focused on is whether or not that retaliation and escalation starts to touch the oil markets. And the way it would do that is by taking Iranian barrels of oil off the market, which we don't think is likely. So what is more likely is targeted strikes against